And Asian markets higher, certainly sending the Hang Seng higher. Let's have a quick check across a number of assets as we wait for European equity markets to open up. We've got the Hang Seng up by 2%, as Tom was pointing out. A lot of positive commentary coming through around the China growth story from Chinese government officials. We're seeing that that's playing out positively for a number of assets. The euro doing well out of that. The dollar slightly on the back foot. Commodities gain, iron ore, copper, all of those looking very positively on what's going on over in China. And European futures then, Tom, go higher.
Yeah, there's those two elements then, the geopolitics with Janet Yellen heading to Beijing, and then the pledge of more support coming through from the Chinese Premier. The futures then over in Germany pointing to upside of 0.4%. Here in the UK, FTSE 100 up 36 points. The CAC current also looking to gain 0.5%. Anna.
Okay, so the futures picture looking pretty positive as we get ready for the start of Tuesday's trading session. Let's see if we get that positive pop in European equities, as we've seen over in Asia as a result of the Chinese commentary. Well, the FTSE 100 first to open and opening pretty flat. Expectations were pretty modest, I suppose, for European equity markets and the extent to which we get that read across. Will we see some of the mining stocks going higher as a result of those higher copper and iron ore prices? That's certainly something we would watch on a day like today. And will we see those higher beta equity markets doing pretty well? The likes of Spain, I can see, up by 0.4%. So that seems to be the crux of it today, up around 0.4% on the early openers today. On the FX space, I mentioned that we have a bit of weakness in the dollar. That's in keeping with the risk-on tone that we've seen coming through from the Asia session. So the dollar index, Bloomberg dollar index, just on the back foot, money going into the pound and into the euro, as you might expect. Yesterday, we got disappointing data out of Germany, and that moved the bond markets. That certainly increased appetite for sovereign bonds and reduced those yields a little bit. We see a bit of a reversal in some of that here in Europe today. Yields going a little higher on the 5-year Italian, Spanish 5-year, and we continue to see strength in iron ore. That's coming through in the green that we see on the commodities column there, Tom. Iron ore up by 3.4%. What do you see on the sector picture?
Well, the gains in commodities then and the linkages to China and the optimism coming through from there, at least for now, is fueling that upside that we're seeing in basic resources. So as a sector, that is now the leading sector, getting 1.5%. And as you illustrated, you're seeing upside across, whether it's copper, whether it is indeed iron ore, or indeed oil, Brent, WTI, all of that lifting then basic resources as a group up 1.5%. Energy as well, tying to the oil story, getting 0.7%. Retail also posting gains of 0.3%. Technology interesting, given the sell-off that we saw in the NASDAQ, a little over 1.4% yesterday with some profit taking there. Technology, though, here in Europe as a sector up 0.3%. So a little bit of money moving back in there. And certainly it's been a positive day for tech, Chinese tech listed in Hong Kong. No major sector on the downside at this point. And again, on the index level, the FTSE 100 posting gains so far of 0.5. The DAX is a bit of an outlier, down a 0.1, and the CAC current gaining 0.5%. But for me, the standout sector right now is basic resources with those gains of 1.6%.
Okay, we continue to watch then the mining sector. Let's just get to some breaking news coming through here, or some early morning movers, I should say, in terms of individual stocks. Prosus certainly on the move this morning. We're seeing that stock, well, it gained 6% out of the gates in Amsterdam trading. So that's part of the story here. But in terms of what they delivered today, they said their earnings dropped in the last fiscal year because of a profit decline at the Chinese tech giant Tencent, where the Dutch investment firm, of course, holds a 26% stake. There's also a slightly more complicated story going on to do with the cross-shareholdings that this business has. The company says it received approval from South African regulators to remove the cross-holding with Naspers, allowing for the continuation of a Naspers share purchase program. So that also a factor that the market will be digesting this morning. Let's check in on what we need to know in these markets this morning. Sam Unstead joins us once again from our Markets Today blog and can take us through some of the developments we're seeing early on in the trading session. We were talking there about the mining sector and how that plays into the London narrative. Of course, certainly that's something we'll watch much on the FTSE 100 side of things. But what about UK stocks? You rightly corrected me earlier when I said we'd seen 11 days of underperformance on FTSE T50. In fact, it was 10. Will it be 11, though, Sam? What do we see this morning?
We'll see as we go through the morning whether the FTSE 250 can hold on to a moderately positive open. It has faded over the course of the last few sessions. We'll see that again. I think, as you guys were mentioning, the commodities much more important for the FTSE 100, you know, which is a very commodity-heavy index. So a lot of the miners this morning will likely be pulling that up.
What's your sense of the technology story then? You had some calls around Tesla coming through from Goldman Sachs yesterday. You had the broader sell-off on the Nasdaq, and the question is as well on many people's lips is whether or not the AI kind of spur has run its course. We're seeing a little bit of upside for that sector today. What's your assessment of kind of where tech stands?
Well, I think at the moment, I think the AI story is absolutely central. You know, I think you know whether that turns out to be just a trend or a fad, you know, however you want to term it, we shall see. But I think at the moment the tech story hasn't really slowed down as much as you might anticipate. You know, I think we are, you know, I can tell you, for example, that we are constantly waiting at the moment for Apple to hit its $3 trillion valuation, and I think there's no expectation that it isn't going to do that. You know, eventually that will happen, and even if you have these sort of bumps in the road for big tech stocks, eventually they kind of get back on track.
Okay, yeah, so exciting to talk about all those AI dynamics. Let me ask you about Sintra, because back to the sort of macro picture, we're going to be focused on Christine Lagarde speaking a little bit later on this morning in just an hour's time, I think.
Yeah.
But then these events carry on for a couple of days, don't they? So what are you going to be watching on the stocks team?
Well, certainly Christine Lagarde today. You know, from markets today, because we are a more UK-focused blog, we'll be looking for the BOE speakers today. So there are a couple today, but the main event really is tomorrow when we have the large panel discussion with Christine Lagarde, Jerome Powell, and of course Andrew Bailey will be on that as well.
Really exciting, because you wonder how often all of them get together in a room.
Yeah, and I mean, often those discussions are much more of a step back, you know, more holistic discussion of central bank policy. So whether there'll be anything in there that really moves markets, we'll have to see. But of course, the last Bank of England decision didn't have a press conference, and so Bailey's comments are likely to be looked at, you know, very, very closely. Okay,
Sam, thanks very much. Sam Alstead from our Markets Today blog. Thank you very much for joining us. You can get more from the team on the front page of the Bloomberg UK website, or you can type TLIV Go into your Bloomberg terminal, and there you find the Markets Today blog. Now, here are some of the key things that we're watching out for today. At 9 a.m. UK time, as I mentioned, the ECB President Christine Lagarde will deliver her keynote speech at the ECB Forum on central banking in Sintra, Portugal. We will bring you that speech live on Bloomberg TV later at 1:30 p.m. We're due to get Canada's May inflation print. We'll also get an inflation report out of Brazil this afternoon at 1 p.m. At 1:30, we're going to get a preliminary reading on US durable goods from May. And at 3 p.m., new home sales data from the United States will be published. And Tom, there's actually quite a lot happening, isn't there? There's the Sintra theme, of course, and as we were just hearing there from our colleague Sam, maybe a focus on that tomorrow with that big panel discussion, but interesting to see what Christine Lagarde says today in her opening sort of remarks to that panel. But actually, a lot of those other market events are interesting. We get data coming out of Latin America, and as we've talked about, that's a big EM carry trade theme at the moment. We've got data coming out of Canada. There's a big housing market focus there. Does that tell us things we need to know about other parts of the world? And durable goods as well, whether we get outperformance there or flattering of the numbers from the defence sector, which of course is topical.
Absolutely, in terms of the spending that's coming through from the Defence Department and the Pentagon to kind of support their efforts around Ukraine. So we're going to be watching that. And really interesting as well to get more of a sense as to where the US consumer stands. And of course, the value of house prices is going to be consequential to that. Here in the UK, of course, you know, on that central bank question, for me, it's going to be whether or not Bailey pushes back on the markets and the pricing around 6.25% as the terminal rate. That's what I'm really focused on when he sits down with those other central bank governors. A big week in terms of how things can move across these markets.
Okay, let's just have a quick check on a couple of the stocks that we said were in focus. Naspers listed over in South Africa, Prosus listed in Amsterdam. Both of those companies in focus this morning as a result of what they've had to say about the the performance of the business and the cross shareholdings, the way they're unwinding some of that. So this is where we are right now. Prosus up by 7.6%. Naspers is up by 7%. Very much linked, though, to the China story. So you wonder how much is this about what they've had to say, or how much of this is the rally we've seen on the Hang Seng sort of being transported over into Europe.
I also briefly flag what's happening with Wise, because that stock is up 15%. We're going to be speaking to the CEO in the next 30 minutes or so. The gains there on the UK-listed company, then gaining 15% on the back of their earnings. Now, coming up, our next guest says it is the year of the hashtag YOLO and emotional consumption.
I'm very glad you attributed that.
We're going to discuss the European luxury sector and other macroeconomic trends with Gillian Dyson from Pictet Asset Management. One of her calls is to play the upside out of China by Ferrari. We'll find out why. Stay with us. This is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
This is Markets Today. We are 10 minutes into the European trading day, 10 past 8 here in London, 10 past 9 if you're in Paris or Berlin. European equity markets go a little higher this morning, up around 0.5% across most of these markets today. Let's get a check on some of the individual stocks that are on the move. Joe Easton has a rundown for us. Joe.
Morning, Anna. So as you say, we are looking at some of the stocks on the move today. Now, Process, the one surprising me, this stock jumping around 8%. Most of those headlines earlier in terms of their earnings were pretty negative, with their net income dropping by about half, and also their operating loss up 40%. But there was also that complicated news around their ownership structure with Naspers over in South Africa, and most of the focus seems to be on that this morning, and that's taken the sting out of some of the drops in the earnings coming over from Tencent in China. Meanwhile, Wise, as Tom mentioned earlier, that one really jumping up 13%, the best performer in London today. That has seen their earnings double. This as they transfer around £100 billion in cash across borders over the past year. They're seeing exceptional volume growth and also benefiting from the money that they've got held in cash, which is seeing higher interest rates, of course, as well. And in terms of the luxury sector, another one mentioned earlier, Kering gaining around 2%. They are buying the fragrance firm Creed. This is the firm focused on travel retail and also China. Now, Kering recently missed out on the purchase of Tom Ford to Estee Lauder, so this is potentially taking the bite out of that. They've got a bit of cash left over from when they sold their stake in Puma, so they're using those funds. That stock could do with a bit of a boost, given it was part of that sell-off in the luxury space we saw just a few weeks ago. That one doing well in terms of the points movers in France, one of the best performers, up 1.8% for Kering today.
Okay, Joe Easton from my equity team on some of the individual movers in focus today. Thank you. And as Joe mentioned, of course, let's dive deeper Into the European luxury space now, with Gillian Deason, Senior Client Portfolio Manager at Pictet Asset Management. So we've seen a bit of M&A, seen some acquisitions coming through with Gucci, of course, and the brand there. When we look at luxury broadly, the top line is it's done very well, of course, year to date on the back of that China impulse, the reopening. Then there was a few wobbles as we got to kind of record valuations for the likes of LVMH. Where do things stand now with luxury and the need for China to come to the fore and support that sector going forward?
We think that actually that really high-end luxury space, so these top quality compounders that have this Chinese exposure, are really interesting spaces to be. Even though we have seen, that sort of tech sector rotation from the market in recent months, we really believe that these are the sorts of companies that are exposed to this most resilient tier of the consumer.
They're not looking overbought to you?
Not yet, no. We actually would think that in the context of the slightly longer term, history of valuations, these valuations are looking, in some cases, rather reasonable. If you take, your sort of some of your top quality compounders like a Richemont or a Ferrari, you're looking at spaces that ultimately are exposed to this very resilient consumer. They've got, they're really net cash positive. They've got really good revenue visibility. I mean, Ferrari has an order book that's full for the next 3 years. So it's an interesting one to look at.
So interesting, you say, and not expensive in your view. Gilliam, good morning. And interesting that you mentioned there some of the more traditional luxury names and Ferrari as well. You take a very sort of holistic, a wide view of what defines the luxury sector, and it isn't all about luxury clothing labels, for example, because you put autos in there as well. Give us a sense of just how wide this definition goes.
Yeah, absolutely. So our definition is really about premium brands, and these are companies from across the broader consumer space that ultimately are offering really best-in-class, excellent quality products and services, but that cater to the consumer aspiration. So these are really companies able to tap into this idea of emotional consumption, that inexplicable need for a new handbag or piece of jewelry or sports car.
Talking of sports, I want to go back to Ferrari and the call there. The subscription in terms of the demand, like fully booked, for 3 years you said. But you're saying, look, Ferrari is one way to get exposure to China.
Absolutely. So a lot of these companies are actually European listed companies, but nevertheless have quite substantial sales exposure in China. For Ferrari specifically, this is a relatively small market for them, but it's growing really fast. Q1 saw 40% growth in China for them. Richemont has a little bit more of a Chinese exposure, around a third of their sales. So you are seeing that ability to get exposure to emerging market and specifically China through a developed listed equities.
And what about the luxury end of the sportswear manufacturers, sportswear makers? Is this an area where we're seeing some of the operators in this space moving up into higher price brackets? What's happening here? What's developing?
Here's where you see probably a little bit more dispersion in many ways. If you look at the behavior of a Nike, one of the best-in-class sporting goods companies, versus some of the other names in the space, you've seen different trajectories there so far this year. This is a space that has been quite challenged by a lot of the supply chain issues that we've seen over the last couple of years, and that should also really benefit from this Chinese reopening, mitigating a lot of those supply chain challenges, bringing back what's typically one of their most high margin markets, which is China. So sportswear is perhaps a little bit more one of our more unconsensus views right now.
Is it too early to start to think about India and the role that the Indian consumer can play in the luxury space and try and position around that?
I think emerging markets generally, and India specifically, where we saw Apple open some of their first stores earlier this year, is a really interesting one, because really when you look at these companies' exposures to emerging market and rest of world, places like India or Latin America, it's still quite small single digits. So you've got a long runway to go. And this is really where I think we're going to see that long-term growth and structural growth for a lot of these companies are in markets like that.
How do you divide up the sort of luxury space in terms of just how luxury it is? Because I noticed in your notes you talk about ultra premiumization as a trend, super premium luxury. There seems to be lots of different ways of looking at the luxury sector.
Absolutely. I think right now you can look at, certainly from the consumer's perspective, a little bit of a two-tier situation right now, where you've got the ultra premium, really, your Ferrari, where you're selling cars at 375,000 euros on average.
That's the aspiration.
Or the new Daytona model that just came out this year with, price tag at 2 million. But then you've got the second tier, which is a little bit more your mass, more aspirational consumer, which perhaps is lagging a little bit in comparison to that ultra premium segment.
I want to pour some cold water on your optimism. Europe is going to head for a recession, would be a call from some. The US is going to head into recession, would be a call from others. Okay, China is there, but it's looking pretty lackluster. If China's stimulus doesn't come to play, we end up in a European recession, a US recession. Luxury really going to hold off? What are you selling? What would you not touch?
Well, first I would say that we've been managing a premium brands portfolio for almost 20 years. And the one thing that you do tend to see is a bit of a lack of correlation between this sort of macro data where we're seeing that weakness of the consumer and perhaps of China and Europe versus the performance of especially the luxury segment. But I would say that really now is the time to look at those high quality compounders, those quality companies in this consumer space, catering to that most resilient tier of the consumer, and really that are very well capitalized with really strong pricing power.
Gillian, thanks very much. Thanks for joining us this morning on Markets Today. Gillian Deason, Senior Client Portfolio Manager at Pictet Asset Management, and as she said, managing that portfolio of those luxury names. Let us just check in on what's been going on the Hong Kong market, and this is relevant because of the story that Tom and I have been talking about with Mark in the last hour as well, around the Chinese government giving a more positive messaging around the second half of the year in terms of growth potential. Also what they're doing with the Chinese currency, perhaps a little bit of a pushback against some of the weakening that we've seen there on the Chinese currency, and all that had been sort of risk negative. So we are seeing the Hang Seng at the end of the trading day there, towards the end, up by 2.3% in session. And that positivity then, Tom, filtering through into Europe. Yeah,
gains of about 0.4% on the yuan versus the US dollar. And you have those big tech names listed in Hong Kong, the likes of Tencent up 3%, Meituan up 3%, and Alibaba as well listed there in about that 3% range as well. So the upside coming through for China tech listed in Hong Kong. Coming up, we're going to get more details on what is making, talking of Tencent, Prosus pop this morning, despite taking a hit, of course, from a profit decline at 10 cents. Stay with us. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Welcome back. This is Markets Today. We are 23 minutes into your European trading day. You're seeing risk on across these equity markets. Pretty modest, but you're seeing gains of 0.4% across the benchmark. The power really coming through for basic resources. That sector up more than 1%, tying into a bit of optimism around China and efforts there to support the domestic economy. Talking of China, because there's a link here, Prosus shares soaring this morning after it announced it would remove the cross-holding structure with parent company Naspers. The Dutch firm also saw declining sales from Tencent in China, which Prosus holds a 26% stake in. Let's get the details then with Bloomberg Quick Takes Alex Webb. Alex, talk to us about the cross-holding, the changes, and what this means for these companies.
I mean, it is wildly complicated. They're trying to make it a little...
That's why we're glad you're here.
Well, but that's why also they're trying to make it a little bit less complicated.
Okay.
Because essentially the way it's structured is that Naspers was this South African media company that bought a 30% stake in Tencent about 25 years ago. It has ridden that to massive market capitalization, but always trades it at a significant discount, partly because it was like 30% of the South African Stock Exchange. They carved out the stake, put it in Prosus, which is now listed in the Netherlands, in Amsterdam. But of course, that's still been trading at a massive discount. And one of the reasons for that was this cross-shareholding, where Prosus owed a big chunk of Naspers, Naspers owed a big chunk of Prosus. It's basically the same people controlling it all. And what they're doing now is essentially just making it the case that Naspers still owns a big chunk of Prosus. Prosus will not own a huge amount going backwards. The idea is it then reduces some of that discount to the value of its stake in Tencent. You know, Prosus is valued at 137 billion euros. Its stake in Tencent is worth more than that. So it's got all these other investments as well, which you're kind of getting for free on the basis of that discount.
Yeah, so it's the company trying to simplify things, trying to make more of that stake that they hold. Then, as you describe it, so we saw an impact from Tencent in the numbers that the business reported. How exposed is the company to Chinese tech moving forward? Then they still have this big Tencent exposure.
It was quite interesting because for a long time under CEO Bob Van Dijk, they were trying to say, well, we don't want to be purely about Tencent. We want to be all these other things, invested in food delivery.
Please recognise the value in the other sort of startup investments we've got.
Exactly, and the sort of message investors, as they looked at the share price and these messages came out, were like, no, we want you to be really just about the Tencent stake. Problem is, of course, things in China aren't quite as rosy as they used to be. We've seen this huge crackdown on Chinese tech companies. We've also seen heightened competition in some of these spaces there. So that means that actually, the investment in Tencent hasn't been going as brilliant as it was maybe 4 or 5 years ago. Nonetheless, the shares are still up quite a bit this year, partly reducing that. But as Tencent has suffered, its earnings have suffered too.
Alex, thanks so much. Bloomberg Quick Takes, Alex Webb joining us there with the latest on the tech space in Europe, the way that it is benefiting or otherwise from what's going on with Tencent over in China, and the linkages there, of course, Tencent, Naspers, and Prosus in the Netherlands. Coming up on the programme, we'll get back to the macro picture. We've been talking a lot about how the Sintra Conference of Central Bankers is taking place over in Portugal. That's where Sintra is, of course. We'll talk to the Latvia Governor, Martins Kazaks. He'll be on the ground with us with Francine Lacroix to give us his thoughts on just how much hiking we need to see. The market, of course, fairly convinced we get a hike over the summer. What happens into September and the autumn, still very much more up in the air. And so we'll try and pin him down on his thoughts, and no doubt that'll be a theme of the conference as we go through it in Sintra. European stocks move higher this Tuesday morning. This is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago, the adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Markets Today. We're 30 minutes into the European trading day. Here are your top stories. Hong Kong stocks lead Asia higher as authorities take steps to slow the yuan's descent and predict faster growth. U.S. Treasury Secretary Janet Yellen will visit China early next month for economic talks. Russian betrayal. President Vladimir Putin denounces leaders of the Wagner Group as traitors in his first public comments since the aborted mutiny. Plus, monetary policy is in focus as ECB President Christine Lagarde delivers the opening speech at the Central Bank's Forum in Sintra in Portugal. We will be speaking live to the Bank of Latvia Governor Martins Kazaks. That conversation coming up very shortly. Tom, a focus then on the macro, a focus on what we're going to get out of Sintra. But it's really the China story that's driving stocks today.
Yeah, and as a result, you're seeing the risk sentiment has changed. You're seeing some upside coming through for European equities. Paired some of the earlier gains, the earlier strength, but it's still there, gaining about 0.3% across the main index is what you're seeing across the benchmark, gains of 0.2%. Again, pairing some of the earlier highs, but China is certainly a factor. There's a couple of things that are coming through on that story. Li Keqiang, I should say, he's taken over from Li Keqiang, suggesting that there's going to be more support for the domestic economy. You've got a stronger yuan, and then you've got the news that Janet Yellen is going to be heading to China for meetings as well. But how long is that optimism going to last? Some of it has faded, at least around the edges. We look to the central banks, of course. We look to that data as around inflation coming out of Europe later this week. And, of course, today, that speech from President Lagarde. So gains, again, 0.2% across the benchmark. The DAX is up 0.3%. The FTSE 100 gain 20 points. Across your sectors, it's consumer, at least the last time I checked, that actually led the gains with the Kering story at play there, making an acquisition. And Kering is one of the leading stocks this morning. But, of course, basic resources, getting that impulse certainly from higher iron ore, higher copper as well, tying to the China story. There's a consumer sector gaining 0.7%. And we know as well that basic resources also seeing that upside. On the downside, you're seeing losses for energy, 0.2%, but also autos off about 0.1%. Banks gaining 0.6. So it's banks, really, retail, consumer, and basic resources
in their respective economies. This comes after a pause from the Fed and a 50 basis point hike from the Bank of England, which was not anticipated. Bloomberg's Francine Lacroix joins us now from Sintra with more. Francine, on the ECB, good morning.
Yeah, good morning, and I'm delighted to be joined by Martin Kazaks. He's the governor of the Bank of Latvia. Governor, thank you for joining us. A lot of debate, and this is the debate that every central bank faces, is do you fight inflation aggressively or do you wait for the lag in monetary policy to come through? Do you see stagflation taking hold in Europe?
I hope not. Okay, of course, we see that the economy is on the soft side, but we will do what is necessary for inflation to come down to our target of 2%. So stagflation is not a good choice to have.
So how many more hikes are you expecting from the ECB?
I think it's very premature to say exactly how much. It's data dependent, but I think, at least on my part, I would not be comfortable in July to say, given the information I have currently on the economy, that we're done. I think we would need to raise rates further. We see that, yes, with somewhat softer economy, but the economy is not weak enough to deal with inflation by itself. So labor market's still quite strong. So I would say that further hikes still necessary. But
in September?
We'll see in September. September will be decided in September, October in October. We move on, new data comes in, we decide about it. And I think very critical element here, of course, is also the fiscal part of the equation. If fiscal policy will not become tighter, then monetary policy will need to counteract it.
Governor, when you look at the markets, what do you think they're getting wrong right now?
I think they're expecting, and they're too optimistic, that inflation will come down much sooner than perhaps we would expect. And I think it's wrong to expect that rates will be cut already in the first half of next year. In my view, I would say that we would need to cut rates only when we see that inflation significantly and persistently starts to undershoot our 2% target. Only then I would say that the rate cuts would be necessary. Otherwise, you know, if inflation converges to 2%, why should we stimulate the economy by cutting the rates? And the higher rates would also allow us to preserve the monetary policy space for further shocks.
So Governor, in terms of timeline, you actually don't see ECB cutting rates before at least the second half of next year?
By no means in the first half, because it's simply inconsistent, in my view, with the baseline scenario that we have. Either the markets are more optimistic on inflation, or they are pricing in different macroeconomic scenarios with, I don't know, financial turmoil or economy in a deeper recession.
Under what circumstances would you actually envision or want, you know, interest rate increases to pause? So not stop, but at least pause.
Of course, it will depend on all those three elements that we very clearly highlighted. What happens with inflation, with underlying inflation, and with the transmission of monetary policy. But one important thing for the markets to take into account is that pausing does not mean stopping. We can add on to the interest rates whenever it's necessary. And currently, my view is that the risks of doing too little are still much higher than the risks of doing too much. If we have raised the rates to somewhat higher than necessary levels, we can very quickly revert that. But if the rates remain at too low a level, inflation will root in, and it can also rebound, so we would need to come back with much stronger rate increases, which would be more painful for the economy. So it's better to keep increasing the rates cautiously, gradually, if necessary, take a pause. But in my view, in July, we will not be able to say that's it, we're done.
But Governor, you seem to suggest that there's a bias in the market, that they're expecting central banks, and especially the ECB, to do less than you will actually do. Is this because they worry more about the economy than inflation and think central bank will focus on that?
I think that the markets perhaps expect that inflation simply will come down much quicker. I would be worried about it because what we see that the key drivers for inflation are becoming to be the ones that are local, domestic factors. We see labor markets still quite strong, wage pressures resilient. We will see in the second half of this year that wage growth on average is higher than inflation, which means, again, adding to the purchasing power of households. I think inflation persistence is much stronger, and the risks for inflation are on the upside.
So do you worry actually about a spiral, wage, price, profits?
It's not there yet, but that would be a nightmare scenario for me, to see that the wage pressures start translating into the price pressures and so on. So we should not allow for that.
Because if that happens, what, the central bank loses control?
No, it simply becomes much more difficult. You need to raise the rates much higher, which means that you need to depress demand much more.
Governor, there's also TLTROs and a huge amount that actually banks have to pay back. How worried are you about some of the smaller Italian and Greek banks?
Of course, one has to remain very cautious in terms of how do the financial markets absorb these changes in the balance sheet. But so far, so good.
But it's not. But the ultimatum is coming now, so it could we see a bumpy
summer? Of course, we will monitor that, and we have instruments to take care of these things. Okay.
Governor, I know this is a delicate question because we don't 100% know what kind of situation we have in Russia, but if there was to be instability in the Russian economy like we feared over the weekend, what impact does that have on the economy, energy prices, and therefore monetary policy?
I think there are many scenarios out there, and I think what the last weekend very clearly shows is that the regime in Russia provides lots of risks. There's high uncertainty and at times even chaos. So I would say perhaps two messages. One, remain very cautious, see what you can do on your own as part of the best Western countries. I think we need to support Ukraine. Yeah. We need to do our homework. We have to be resilient and hold together. As for the companies still active in Russia, I would say that they still not appreciate all the political risks that they have faced and will face. So staying in Russia is an extremely high-risk business. So they could do better with doing their business elsewhere.
Do you worry about price stability?
It could have impact, for instance, as you mentioned, on the both energy prices, also perhaps food prices. But there's so many scenarios currently that it is very difficult to speculate on the actual impact of the economic outlook. So be vigilant, be cautious, do your homework.
Governor, thank you so much with those wise words at the end. That was Governor Kazak's with that, and I'm going to send it back to you in London. And of course, we'll have plenty more from Sintra throughout the day.
Fran, thanks so much. Bloomberg's Francine Lacroix in Sintra with that ECB conversation, important conversation, and not wanting to be pinned down on, well, not even July, let alone September. Let me tell you that we bring you plenty of coverage of the Sintra events. The ECB President, Christine Lagarde, will be giving her welcome speech. That's at 9 a.m. UK time, right here on Bloomberg TV. You can follow that. And, of course, we'll have it across the Bloomberg terminal for you as well.
And here's a really interesting corporate story coming up. Wise shares jumping, by the way, just over 20%. In early trading here in London after the money transfer firm reports an earnings beat. We're going to speak to the CEO about those numbers and the decision to list in London. That is next. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Or other authorities.
Could face bigger challenges next.
Was going to keep Great World Cup.
This is a 3.
As the economic picture does.
The BOK is getting ready to make.
This is Markets Today. We're 43 minutes into the European equity trading session, and you can see European equity markets, well, modest gains. They were up more strongly than this, thanks to positive vibes coming through from Chinese authorities talking about better growth in the second half of the year, changing the FX exchange rate around the yuan, trying to reduce some of that weakness. That's been all something that those things have been supporting the Asia trading day, but actually just falling off a little bit as we go through the European trading day. Now, let's get to a stock that is doing very well today, though. Wise shares have surged in early trading after boosting the company's 2024 outlook. The money transfer firm is the biggest gaining stock on Europe Stock 600 today, with Wise shares turning positive year to date. The stock up by 17.7%, just up by 20% a moment ago. Let's talk to the Wise CEO, Christo Carmen, who joins us right now here on set in London. Christo, very nice to have you with us. Thanks for coming to join us. So a bit of an upgrade to your outlook for 2024, and that seems to have done the trick. It's certainly positive, and a number of analysts reacting very positively. The share price goes higher. So far, so good. One analyst who actually is a bit less positive says, yes, this looks great at first blush, but there's a risk from slowing average volume and a potential squeeze on gross and net interest income. Does he have a point? Are you concerned that things get a little tougher from here?
So from our perspective, we're just starting starting our journey. We're really only scratching the surface. We have about 5% market share across people moving money internationally, about less than 1% of small businesses. So at this point, we're just really getting started with everything. And what we're seeing is all of our results are driven by customer growth. So our customers talking to their friends, their families, bringing on more people to Wise. So we're now, the last financial year, we had 10 million people use Wise across the world. So that's the thing that really drives our results in the medium term.
Just to push on the volumes question,
please,
because there is a bit of concern that volumes are not looking as healthy as maybe they could have. Do you expect volumes? Are you seeing those picking up in the second half? Your customer base has increased, but volumes are looking for some at least a little tepid.
What we see is there are like volumes of how much people and businesses move internationally. Yeah. This is not for us to do anything about. So that's going to be slightly volatile with the economic cycle, maybe with other things happening in the world. We expect this to kind of move up and down and stabilize. And over the long term, it doesn't really make a big difference as the base is growing so fast.
Okay.
And we're taking market share.
Yeah, we're just really trying to find the weak spots, but the stock's up 18%. So, you know, we'll certainly give you that. In terms of that volume story, though, and you say it's for others to control, but it does have an impact on your bottom line. So, I mean, are you seeing that, you know, migration trends, does that have an impact on the amount of money that, or the need that people have to transfer cross-border? Cost of living crises in various parts of the developed markets, are these factors that weigh on the willingness of people to transfer?
Well, people are transferring, but they're now using Wise more as their international banking service. So one is people, expats moving between countries, but then also small businesses. When you're a Swedish furniture maker and you're invoicing all around the world, getting an international banking service which gives you local accounts around the world, you can invoice in local currencies, that's a really big deal. So there's now an increasing number of businesses that take us as their international operating system. And that is definitely on the rise. So people in businesses are not not hunkering down and focusing on their domestic markets. They're going international.
Okay, so the stock is up today, obviously healthily, but you're still down from the list price when you listed in the. Any regrets on listing in the UK? Is the UK still a good place to do business?
Actually, we listed, remember, as a direct listing. Okay. So we didn't set the list price. It was set in the auction, so we didn't really control the process, and that was fun. It was one of the first direct listings in the UK.
Do you regret not listing on NASDAQ?
Not really. We deliberated a lot at the time, but our international shareholder base is very international, as are our customers, and it hasn't changed. We still have a lot of American funds holding our stock and more buying up. So it doesn't matter for them if we're based in London or...
Does it not matter? Because you see some other businesses that are London listed contemplating dual listings over in the United States, for example, or even moving primary listings, and some of that coming from pressure from shareholders. You don't get any of that pressure then?
I think there is work to be done in the UK, modernizing the regime a little bit, and I know the stock exchange is working on this. So I think this is just going to is going to happen and catch up a little bit with where the US already is.
There's change at the top, at least temporary change at Wise. So your CFO is going to be stepping down in March of next year, I believe. You're also taking some time out. How do you reinsure, when these lines came out, when the news dropped, there was a bit of a move down in the stock on the back of these announcements. How do you reassure investors around what some are seeing as kind of churn at the top?
Well, I'm coming back in December, yes. And we have actually a policy in the company that everyone gets to take a 6-week sabbatical after the 4 years in the company, because we're working really hard, and you've got to take a bit of time off to kind of recharge. So I'm taking this now. I've missed all my previous opportunities. So 12 years in, it's my first sabbatical. But our leadership team is really strong. So they've been with me, most of them, for more than 6-7 years. Our CTO, Harsh, has taken over as an interim CEO. He's been with me for 8 years. So we have a really tight team, and we're not really concerned of me taking some time off. And you know, we wish we didn't have to find a substitution for the CFO, but we will do that as well.
On another subject, we talked about the regulatory regime in London and catching up on some fronts you suggested. In terms of crypto regulation, I know you say on your website says you don't accept crypto in certain situations, but the SEC getting more hostile, it's obviously a big talking point in sort of financial technology and fintech circles. Your thoughts on what's happening in that particular space?
We've been kind of slightly distant from the crypto debate. We believe that the problems we're solving of making money move globally can totally be solved with national currencies, fiat currencies, and it's better solved this way, actually. So we don't really follow that debate. I'm probably not the best person to have an opinion.
Okay.
Just very briefly before we let you go, how are you thinking about AI and building that into the business?
I think this is going to change a lot. It's going to change a lot in how we operate, how we build products and features. Okay. I think it's a good thing that we'll all benefit from.
Okay, Chris, I really appreciate your time. The stock is up 19% as we speak on Wise, on the upgrade to their forecast in terms of earnings for the year. Wise CEO Kristo Carman there. Coming up, BOE expectations drive sterling calls higher. We're going to take a look at cable and other FX pairings. That is next. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Markets Today. We are 53 minutes into the trading day here in Europe, and you can see that European stocks are flat to positive, actually, despite the fact that US futures are a little firmer. NASDAQ futures up by 0.4%. Let's talk about what's happening in markets. Ven Ram joins us from our Markets Live team. Very nice to have you with us to round out the hour, Ven. And you're focused on FX this morning. The pound is your highest conviction call for the year. Risk on was lifting the pound and the euro a little earlier. How are you viewing the pound call now?
Well, the pound still remains very much my high conviction call. We called the pound higher at the start of the year, and it's worked out well. It surged more than 5% since then. I do think that it still has plenty of upside because the BOE is a long trek ahead of it, which will push inflation-adjusted rates sharply in favor of sterling. I do think that the pound is on track very much to access 130 later in the year. Even higher levels are possible, but it will come down to what the Fed does on the other side of the equation. If the Fed were to stop because of concerns surrounding a recession, then real yields in the US will crumble, and that will add another flank of upside to sterling.
Ven, I get that. It's been a great call. I just want to push back because the counter to that would be we're going to end up in a deep recession here in the UK, would be the call from some because of these higher rates, and it's that economic drag that's actually going to prove a hit to the pound.
Well, a recession is possible, but I don't think it's going to be an occurrence anytime soon. As Governor Andrew Bailey himself acknowledged the other day, the UK economy is doing a lot better than economists had forecast, and I expect that performance to continue over the next 6 months. But beyond what happens in the second half of 2024 is a call for later. At the moment, the pound's upside is still intact. And, we've had a lot of doom-mongering about the UK economy in the past year. It hasn't really worked out. The labour market is extremely sticky and tight, and that will keep the UK economy going. And I do think that, the people are underestimating the strength and resilience of the UK economy.
Okay, Ven Ram from our Markets Live team, thank you on the call for further upside for the pound. Remember, you can get up-to-date analysis and insight, of course, from Ven and the rest of the team. Just go to MLive Go on your terminal. A couple of stocks on the move for us, Anna. We were talking about Naspers and Prosus and the change in terms of the cross-holding there, and you were debating as to whether or not that was more about what was coming through in terms of China and the upside that we've seen for Tencent, which ended up about 3%. But there's Prosus gaining 9%. Naspers, of course, in similar territory. BT Group is a different story, though. Yeah, BT Group, we've got a downgrade there, cut to sell at UBS with a price target of 120. It's a 122 right now, so that weighs there. And JD Sports also in focus. That stock down by just over 5%. One of the worst performers on the stock 600 after the sportswear retailer gave a trading update ahead of its AGM. So that's what's moving markets this morning. That is it for Markets Today. You can get insights from us and the team on the front page of the Bloomberg UK website by typing TLIV Go on the terminal. This is Bloomberg.
So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means, for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone. Day one. Welcome to The Pulse with me, Francine Lacqua, a brand new show with high-profile guests in the beating heart of global business, economics, finance, and politics. Now, we go wherever the story is, and for our first show, we're here in Sintra, Portugal, for the ECB Forum on Central Banking, where central bank governors, government officials, and financial market experts come together to discuss policy issues and the big economic challenges under one roof. We have Jay Powell, Andrew Bailey, and Christine Lagarde. Now, here's what's coming up on today's program. Monetary policy is in focus as ECB President Christine Lagarde delivers the opening speech at the Central Bank's Forum here in Sintra. We'll bring you her address live, plus interviews throughout the day. Russian betrayal. President Vladimir Putin condemns leaders of the Wagner Group as traitors in his first public comments since the aborted mutiny. Plus, Beijing bound. The U.S. Treasury Secretary Janet Yellen will visit China early next month for the first high-level economic talks with her Chinese counterpart. Now, we're expecting Christine Lagarde, who we just saw in the foyer just about 5 minutes ago, actually walking to where she was delivering her keynote speech. It'll be extremely interesting to hear her talk about monetary policy and, of course, the big question that the Fed, the central bank of, well, many countries around the world, including the ECB and the Bank of England, have to ask themselves is that, do you focus on inflation now, or do you wait a little bit to see how much actually of an impact what you've done so far in raising rates will have an impact on the economy and therefore on inflation? Remember, last time we were in Sintra was about 12 months ago, and since then, the ECB, for example, has raised rates by 400 basis points. It's pretty incredible to see the change in the narrative over the last couple of months as well. This is what we're looking at in terms of the markets, the focus firmly not only on euro dollar, but everything we're seeing in between. So let's get that market check up for you if we can. Now, the focus is, of course, on central banks around the world, but stocks are rising overall. European stocks are following really Asian shares higher. We had a raft of data earlier on, and that will continue through the U.S. trading session. Remarks really by the ECB's President Christine Lagarde will be scrutinized by traders who've been growing more anxious as central banks will keep pushing rates higher and risk sending fragile economies into reverse. We did speak to one ECB board official, Mr. Kazaks, Governor Kazaks, who is saying the markets are getting completely wrong what they're trying to do. They will continue, he believes, pushing rate higher until inflation is under control. So this is what else we're looking at. Of course, the focus is on Christine Lagarde. So these are the main stories that we have our attention on today. The other thing, of course, Bloomberg has learned that U.S. Treasury Secretary Janet Yellen is planning to visit Beijing in early July. Now, this is the first time that she's going to engage in talks with her Chinese counterpart, who is a longtime confidant of President Xi. China's Premier Li Qiang has warned governments that removing China from supply chains will only fragment the world. He gave a keynote speech to global business leaders as the U.S. and Europe press ahead with plans to de-risk supply chains.
Some in the West are hyping up the so-called phraseologies of reducing dependencies and de-risking. These two concepts, I would say, are false propositions. Governments and relevant organizations should not overreach themselves, still less overstretch the concept of risk or turn it into an ideological tool. We should oppose the politicization of economic issues and work together to keep global industrial and supply chains stable, smooth, and secure. Without peace, nothing can be achieved. This is a hard lesson humanity has learned from history.
Well, that was the Chinese Premier Li Qiang speaking at the World Economic Forum in Beijing, opposing de-risking by the West. Former President Donald Trump is heard discussing what he calls, quote, secret information that he says he doesn't have the power to declassify in a 2021 audio recording obtained by CNN. Now, reports indicate that the recording includes a moment when Trump appears to indicate that he was holding a document regarding possible military action against Iran. Now, in corporate news, Credit Suisse is to pay a $900,000 fine to settle allegations that it reported debt trades late and misapplied key indicators to hundreds of thousands of transactions. U.S. regulator FINRA says the Swiss bank's brokerage in the U.S. reported about 9,000 trades late during a 7.5-year period up to March this year. Credit Suisse, now part of UBS Group, did not admit or deny the findings and declined to comment. Now, as we are expecting Christine Lagarde to take the center stage here shortly in Sintra, Portugal, for the ECB forum, let's go back to see any moves in euro-dollar. Now, she's just being introduced by Wolfgang Prüssel, so we should be able to listen to her very, very shortly. Look, if you look at what markets are looking at, and I had an interesting conversation with the central bank governor, council member of the ECB, he says traders have misunderstood the resolve of the ECB and other central banks around the world in dealing with inflations. If you look at what's going on in equities today, traders may have finally relented on their bets that the Fed will cut rates this year. This is after Jay Powell last week warned that the U.S. may need 1 or 2 more rate increases in 2023. Now, I think the speech of Christine Lagarde has just been released. This is what usually happens when you're at a big event like this. The speech is released, a lot of reporters will comb through it, and then she'll deliver that speech very shortly. So Christine Lagarde saying they'll continue to raise rates in July. That, I have to say, is probably not breaking news, as the market is fully pricing that in. The question is what happens in September. Christine Lagarde also saying they must avoid expectations of a too rapid policy reversal. She says, and she will say in her delivered remarks, that rates will stay elevated as long as necessary. Now, she says they must make rates sufficiently restrictive. This is a point of tension that we've heard also from Geeta Gopinath, the IMF deputy, that spoke and opened the late dinner last night here at the ECB forum. She says the other thing that we don't spend enough time on is the fact that monetary policy is trying to do one thing, and you have fiscal policy because of the support in trying to really support the ones that have the least in these economies, that is basically counteracting what we hear from monetary policy. So we'll continue, of course, monitoring that speech. Christine Lagarde should be taking center stage very, very shortly, and we'll hear if she has anything to push back against, for example, some of the rate cut expectations that's being priced into the market. She has also, and will say, that it is unlikely that the ECB can say soon that the rate peak is reached. There she is, President Lagarde, just starting on stage a couple of meters from where we are. Let's listen in.
Thank you to all of you for being here in Sintra, and those of you joining us online as well. You're missing the wind and a beautiful, beautiful location, I tell you. Inflation in the euro area is too high and is set to remain so for too long. But the nature of the inflation challenge we are facing in the euro area is changing. We are seeing a decline in the inflation rate, headline predominantly, as the shocks that originally drove up inflation wane and our monetary policy actions are transmitted to the economy. But the pass-through of those shocks is still ongoing, making the decline in inflation slower and the inflation process more persistent. This persistence is caused by the fact that inflation is working its way through the economy in phases, as different economic agents try to pass the cost onto each other. Monetary policymakers need to address this dynamic decisively to ensure that it does not lead to self-fulfilling spiral fed by the de-anchoring of inflation expectations. So the key question we face today is, how can we break that persistence? In the ECB's Governing Council, many members of whom are here in this room, we have been clear that two elements of our policy stance will be key. And I will quote elements of our monetary policy statement. We will have to bring rates to, I quote, sufficiently restrictive, unquote, levels, and keep them, I quote, for as long as necessary. Both elements are affected by uncertainty about the persistence of inflation and about the strength of the transmission of monetary policy to inflation. Setting the right level and length will be critical to our monetary policy as we continue our tightening cycle. So in my remarks today, I will explore why the inflation process has become more persistent and what this implies for our policy stance. Disclaimer, typical of a lawyer, some will say. My intention is not to signal any future decisions, but rather to frame the issues that monetary policy will face in the period ahead. So let's look under the skin of inflation. The euro area economy has faced a series of overlapping inflationary shocks since the end of the pandemic. Since the beginning of 2022, these shocks have both raised the price level by 11% and led to us transferring more than 200 billion euros to the rest of the world in the form of a terms of trade tax. In an environment such as this, the natural reaction of every economic agent is to try to pass on these price increases to other actors in the economy. In the euro area, we can identify two distinct phases. The first phase was led by firms, which reacted to steeply rising input costs by defending their margins and passing on the cost increases to consumers. The intensity of this reaction was unusual. During previous terms of trade shocks in the euro area, firms have tended to absorb rising costs in profit margin as slower growth made consumers less willing to tolerate price hikes. But the special conditions that we experienced last year turned this regularity on its head. The sheer scale of input cost growth made it harder for consumers to judge whether price hikes were caused by higher costs or higher profits, fueling a faster and stronger pass-through. As this was not enough, at the same time, pent-up demand in reopening sectors, excess savings, expansionary policies, and supply restrictions brought on by bottlenecks gave firms more scope to test consumer demand with higher prices. For this reason, unit profits contributed around 2/3 to domestic inflation in 22, whereas in the previous 20 years, their average contribution had been around 1/3. This, in turn, led to the shocks feeding into inflation much more quickly and more forcefully than in the past. This first phase, however, is now starting to wane. Largely thanks to lower energy prices, year-on-year producer price inflation has already dropped by 42 percentage points from its peak last summer. And while it is taking time to feed through to prices more generally, it is partly being reflected in a broad-based decline in headline inflation and a leveling off in some measures of underlying inflation, especially exclusion-based measures and those that capture the persistent effects of energy on economy-wide prices. At the same time, high inflation has eaten into domestic demand, which contracted by 2% over the last 2 quarters, and the consumption impulse created by excess saving is fading. The early effects of our policy tightening are also becoming visible, especially in sectors like manufacturing and construction that are more sensitive to interest rate changes. So faced with this combination, falling input costs and dwindling demand, we saw unit profit growth slow markedly in most sectors in the first quarter of this year. But the second phase of the inflation process is now starting to become stronger. Workers, who are also consumers, have so far lost out from the inflation shock, seeing large real wage decline, which is triggering a sustained wage catch-up process as they try to recover their losses. This is pushing up other measures of underlying inflation that capture more domestic price pressures, particularly measures of wage-sensitive inflation and domestic inflation. And since wage bargaining in many European countries is multi-annual and inertial, this process will naturally play out over several years. In our latest projections, we expect wages to grow by a further 14%, between now and the end of 25, in real terms. While this catch-up has long been factored into our inflation outlook, the effect on inflation from rising wages has recently been amplified by lower productivity growth than we had previously projected, which is leading to higher unit labor cost. Alongside past upward surprises, this is a key reason why we recently revised up our projections for core inflation, even though our expectation for wages remained broadly the same. Two features of the current business cycle are contributing to this dynamic, and both could linger too. The first is the resilience of employment relative to GDP growth. Some call it the mystery, not all. Typically, most of us would have expected slowing economic growth over the last year to have somewhat reduced employment growth. But for the last 3 quarters in particular, the labor market has been performing better than an Okun laws-based regularity would suggest. That disconnect partly reflects increased labor hoarding by firms in a context of labor shortages, which is visible in the current gap between total hours worked and average hours worked. And this is weighing on productivity growth. And with unemployment expected to fall slightly further over the projection horizon, the motivation for firms to hoard labor may not subside that quickly. The second feature, in addition to hoarding, contributing to weaker aggregate productivity, is the composition of employment growth, which is concentrated in sectors with structurally low productivity growth. Since the pandemic, employment has grown most in construction and the public sector, both of which have seen a decline in productivity, and in services, which has seen only a meager productivity growth. These trends could also persist in some of these sectors over the next few years, given the relative weakness of manufacturing and long-term shift towards employment in services. All of this means that we will face several years of rising nominal wages with unit labor cost pressures exacerbated by subdued productivity growth. And in this setting, monetary policy must achieve 2 goals. First, we must ensure that inflation expectations remain anchored as the wage catch-up process plays out. While we do not currently see a wage price spiral, or a de-anchoring of expectations, the longer inflation remains above target, the greater such risk becomes. That means that we need to bring inflation back to our 2% medium-term target in a timely manner. Second, for this to happen, we need to ensure that firms absorb rising labor costs in margin. If monetary policy is sufficiently restrictive, the economy can achieve disinflation overall, while real wages recover some of their losses. But this hinges on our policy dampening demand for some time so that firms cannot continue to display the pricing behavior that we have seen recently. Sensitivity analysis by ECB staff underlines the risks we would face if firms tried to defend their margins instead. For instance, if firms were to regain 25% of the lost profit margin that our projections foresee, inflation in 25 would be substantially higher than the baseline at almost 3%. So faced with a more persistent inflation process, we need a more persistent policy. One that not only produces sufficient tightening today, but also maintains restrictive conditions until we can be confident that this second phase of the inflation process has been resolved. So what does that imply in policy terms? We have not yet seen the full impact of the cumulative rate hikes that we have decided since last July, 400 basis points. But we know that the job is not done yet. Bearing a material change to our expectations for inflation, we will continue to increase rates in July. And as we move further into restrictive territory, we need to pay close attention to two dimensions of our policy. First, our actions on the level of rates, and second, our communication on future decisions and how that is influeon the expected length of time that rates will remain at that level. The Governing Council has provided orientation on both dimensions. It has stated clearly, and I repeat, that future decisions will ensure that the key ECB interest rates will be brought to levels sufficiently restrictive to achieve a timely return of inflation to our 2% medium-term target, and will be kept at those levels for as long as necessary. Two sources of uncertainty affect the level, the desired level and length of our interest rate policies. First, since we face uncertainty about the persistence of inflation, the level at which rates peak will be state contingent. And it will depend on how the economy and various forces that I have described evolve over time. And it will have to be continuously reassessed. Under these conditions, it is unlikely that in the near future, the central bank will be able to state with full confidence that the peak rates have indeed been reached. And this is why our policy needs to be decided meeting by meeting and has to remain data dependent. Second, we face uncertainty about the strength of monetary policy transmission. The strength of transmission connects current decisions with expectations of future policy and therefore affects the policy stance. How strong transmissions turn out to be in practice will determine the effect of a given rate hike on inflation, and this will be reflected in the expected policy path. Uncertainty about transmission arises from the fact that the euro area has not been through a sustained phase of rate hikes since the mid-2000s and has never seen rates move so fast, so quickly. And this raises the question of how quickly and forcefully monetary policy will be transmitted to firms via interest-sensitive spending and to households via mortgage payments. For firms, ECB analysis finds that monetary policy shocks are typically transmitted more quickly and forcefully to manufacturing, reflecting a sector's higher interest rate sensitivity, while there is more muted and delayed impact in services. The key question really today is whether the services sector will eventually catch down, not catch up, catch down, which is what we have seen in previous cycles, or whether it will be insulated from the effects of policy tightening for longer than in the past, given the strength of demand and employment in the sector. That's for firms. For households, there is evidence that it will take longer for policy changes to pass through to interest burdens in this tightening cycle, as a higher share of households have now fixed-rate mortgages than in the mid-2000s. At the same time, once mortgages have been repriced, the restrictive effect may be greater. Gross debt-to-income ratios, which emphasize debt servicing capacity, are higher than in the previous tightening cycles, while the share of homeowners with a mortgage has increased. Both sources of uncertainty will only fade away over time. And that is why we have made our future policy decisions conditional on, first, the inflation outlook, second, the dynamics of underlying inflation, and third, the strength of monetary policy transmission. But to ensure that uncertainty does not interfere with our intended policy stance in terms of both level and length, 2 points are clear. First, we need to bring rates into sufficiently restrictive territory to lock in our policy tightening. We need facts on the ground. Second, we need to communicate clearly that we will stay at those levels for as long as necessary. And this will ensure that hiking rates does not elicit expectations of a too rapid policy reversal and will allow the full impact of our past actions to materialize. And all the while, we need to carefully evaluate the strength of policy transmission in order to avoid an error in calibrating policy in either direction. So in conclusion, it will not surprise you if I say that monetary policy currently has only one goal: to return inflation to our 2% medium-term target in a timely manner. And we are committed to reach this goal, come what may. As the author Helen Keller wrote, our worst foes are not belligerent circumstances, but wavering spirits. We have made significant progress, but faced with a more persistent inflation process, we cannot and we will not waver. Of course, we wish, but we cannot declare victory yet. Thank you very much.
Well, that was the ECB President Christine Lagarde's opening speech here at the ECB Forum in Sintra. Now, what was interesting is, first of all, she didn't mince around. She said, look, we're not done hiking rates. She said very clearly, this was the opening speech here in Sintra, that we need to communicate clearly that we will stay at those levels for as long as necessary. She basically really finished her speech by saying, look, she wishes she could cry victory, but that's not the case yet. So here with me for full analysis and insight is Seth Carpenter. He's Chief Global Economist at Morgan Stanley. Seth, great pleasure to actually listen to the speech together and discover what Christine Lagarde had in store for us, which is the lady's not for turning. They will continue hiking until inflation goes down.
Absolutely. I actually think she highlighted one extra nuance about policy that is going to become one of the key themes in the market. So far in this hiking cycle, markets have debated where is the peak rate, when will they stop hiking? And one point I try to make to our clients is that markets often think in changes. How much are we raising rates? Central banks often think in terms of levels, and so that's why everyone's focused on the peak rate. But President Lagarde also highlighted another key aspect, for policy, which is how long rates will be staying at those peak rates. Now, this is a theme that, for example, Federal Reserve Bank President Bostic brought up in recent weeks as well. And I think that's the next frontier in this debate about fighting inflation.
So what do you think the market is getting more wrong? How long, the cuts in next year, do you see them coming from the ECB, or are they getting wrong, again, the level of hiking that will happen this year?
Well, I think there's still, and I think President Lagarde made this clear, that she was willing to lean into another hike in July, but was uncommitted to what happens after that. We think 3.75 for the policy rate for the ECB is probably where they get to, with a bit of upside risk from there. I think the market has that part fairly well sussed out. The timing of the cuts, though, I think will be subject to lots of revisions, because markets have to price in not just what's intended, but also eventually what happens, including if, for instance, there's a recession.
So, Seth, where do you see the level going in September? Are you expecting them to hike? I mean, we spoke to a couple of central bank governing council members from the ECB, and they say, look, everything's open, but actually, if we look at the data today, it's very likely that we'll see a hike in September.
Yes, so we do think getting to 3.75 is very much the place for the ECB. I would say right now, policymakers just have to err on the side of saying, we have lots of options are on the table, and we will keep hiking if needed. I don't think they have a chance anytime soon to in any way declare victory.
Okay, what happens after September? Again, I mean, this is $1 million question, but if you look at core inflation, and if you look at the biggest concern, which Christine Lagarde was also talking about, which is a spiral, the fact that there's a wage price, pressure that they lose control of, is there less of a chance that monetary policy's mistake is actually hiking too much now?
I think there are risks all over the place. I think in particular with the point about the wage price spiral that President Lagarde seemed to emphasize, I would put that in contrast to a different part of inflation that she also emphasized, which is the margins that we're seeing among firms in terms of how much they can charge customers relative to what their costs are. In the work that we've done at Morgan Stanley, we have tried to ask just how much historically has there been of a pass-through from wages specifically to consumer prices, and it's much smaller than I think most people realize. So I personally am less worried about this wage price spiral.
Okay. Are you worried about the German economy? That seems to be the one thing that people keep on pointing to. We had the IFO numbers yesterday that frankly were pretty ugly.
Absolutely. So there was some slowing. We know in Germany, across the European sector, manufacturing has been hit even harder than services. I think the challenge here is now just the perennial challenge for monetary policy, which is how do you do enough of slowing the economy without tipping over? So I am worried, and I think Germany will be particularly hard hit.
We heard from Gita Gopinath yesterday, the Deputy Managing Director of the IMF, and we heard it there also from Christine Lagarde. They don't know what to do with fiscal policy. So if you have monetary policy increasing rates, but fiscal policy pumping money, I mean, they almost, they're against each other, so they equal it out.
So I think that is always a challenge, forecasting for central bankers. And in general, in my experience, having spent 15 years at a central bank, the answer is usually the central bank just has to take as given what the fiscal authority is doing and then react to that. So the more impetus that comes from fiscal policy, presumably then the more restraint monetary policy needs to provide.
So we also have Jay Powell here. I find it always quite exciting, especially when you say I'm walking actually wearing trainers, sneakers, which we're just not used to, so I had to take a double take. But how hard is it to go against what the Fed is doing? So there's always this gravitational pull out of the U.S. policy that if you're the ECB or the Bank of England, you feel it.
I think there is that tension. One of the ways that tension manifests itself often is through exchange rates, currencies. For now, it seems as if most of the policy rate differential has been reasonably well priced into markets. So I think in that regard, at least for now, each of the central banks has the opportunity to focus very much on domestic issues.
Who has the hardest job? Bank of England?
I would say, yeah. I mean, I think if we look at what just happened with the Bank of England, they eventually people got there, but the 50 basis point hike going back to bigger rate hikes because of this upward surprise in their inflation rates, I think there really is a much more difficult job to be done there. There is some slowing going on in the UK, and yet inflation remains so stubbornly high there. the consumer goods inflation for the UK is actually a bit of an outlier among developed market economies. And so I think in that regard, things are difficult for everyone, but perhaps just a bit more difficult for the Bank of England.
Seth, were they right to hike 50 basis points? I don't know how much this has to do with credibility, right? You can't have that hot inflation number the day before and then just deliver a 25 basis point hike. But is there a danger that the market now, prices that in as kind of the new normal and runs with it?
I mean, I do think that's the debate going on right now in markets, is trying to figure out just how much to price in, and the markets have priced in a peak rate of 6% and at times a bit more. Was it right? Was it wrong? I think that's almost impossible to answer right now. In no small part, last night at dinner, President Lagarde also quoted Kierkegaard saying, "Life has to be lived going forward, but can only be understood in reverse." And I think that's exactly the challenge that central bankers are facing, and in the UK in particular. Now, what happens if markets over-extrapolate? I do think it would be easier for a central bank to tell markets that we're not planning on doing as much if, and only if, the inflation data, the real side data start coming in line with what they expect. So I think for now, it wasn't a mistake. I think it was clear that they needed to show resolve, and then we'll take it from there.
But again, it's the most important thing that, they work in tandem with fiscal policies, because they also have huge, we can't underestimate the impact of housing and mortgages in the UK. So you could see the economy topple quite quickly.
No, it's funny you say we can't underestimate the importance of those factors, and I completely agree. The problem, as I see it, for central banks is that we can only estimate it, and knowing exactly what happens in real time is the challenge. And so how much will that reset of all those mortgages, how much will that weigh on consumer spending? Well, we've got estimates based on historical data, but boy, it's going to be really hard to see how that works out in this immediate post-COVID world.
Seth, tomorrow is a big policy panel. How will Jay Powell navigate that? Is he going to try and say as little as possible?
I don't know that he'll try to say as little as possible. I think his themes recently have been clear, that they are committed to returning inflation to their target. He spent time in his testimony to the U.S. Congress pointing out that the majority, the overwhelming majority of FOMC participants is looking to hike more. And so I think he'll go back to that same messaging of they know what they need to do, they have the resolve to do it. I think it will be interesting on that panel, though. Some of the same questions you're asking me now about who's got it harder, what are the similarities and what are the differences of the challenges different central banks face. I think that's going to be, for me, the most fascinating part of the policy panel.
How many questions do you think they'll field on Russia? Again, we had quite a weekend, right? And we're still trying, frankly, it's just getting weirder and weirder. We're trying to figure out exactly what happened. But if you have an unstable Russia, what does that mean to energy prices? What does it mean to oil? And what does that mean for monetary policy?
I think that's clearly got to be a topic of conversation, either in and of itself or through the channels you mentioned, especially energy prices. President Lagarde highlighted the terms of trade shock that the European economy has faced. I think that's first order important. We got through last winter when everyone was very worried, is the European Union Euro area going to have this horrific recession because of a cold winter? And in the event, we skirted that outcome.
It's colder now in Sintra, actually, isn't it?
With the wind one could generate wind power here. I can tell you that. No, I mean, I think it's very interesting. I will say our European economics team, led by Jens Eisenschmidt, has done some great work, though, saying that the European economy is actually now, it seems more resilient because we got through last winter. The storage of gas is strong. The ability of the economy to redirect when commodity prices go up is very strong. And so we're actually feeling like that might be one of the very few risks that may have diminished this year relative to last year.
All right, Seth, thank you so much for coming on. Seth Carpenter, their chief economist at Morgan Stanley. Now, we'll have much more, of course, from Sintra. Still ahead, we talk about the Russian President Vladimir Putin. He blasted the Wagner Group as traitors. So we discuss the state of play in Moscow next, and this is The Pulse. you're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Climate is one thing that connects everybody across the globe. And if we don't do something about it, it brings down the value of all companies.
So the Wagner mercenary group saga continues. The Russian Defense Ministry saying the group is to hand over heavy weapons to the army. Now that's after the President Vladimir Putin condemned the group as traitors to Russia. Joining us now is Bloomberg's European correspondent Maria Tadeo. Maria, good morning. So there are new lines out of Russia involving Wagner and what looks like a possible dissolution. So what do we actually know about this?
Yes, Francine, I think the term dissolution here may actually be very accurate because at this point, the Russian MOD, the Ministry of Defense, says they have now agreed, and Wagner has agreed, they will transfer their heavy weapons to the Russian army. That is on top of yesterday when President Vladimir Putin said that Wagner members who did not participate in the march to Moscow could either integrate the Russian army or go back home or head to exile, essentially, in Belarus. At this point, the question is, what is a group of mercenaries that do not have troops and do not have weapons? Essentially, what it looks like is this is a Russian MOD making it clear now the Russian army will call the shots. They want the weapons and they want the troops to really understand you either join us or you need to go away.
Maria, we're just also getting really the first comments from the Belarus president, Alexander Lukashenko, saying that, look, the Russian mutiny was painful to watch. What we know is that a business jet belonging to the mutiny's leader, the Wagner mercenary chief Prigozhin, reportedly landed in Belarus, but we actually don't know immediately, or it's not immediately clear who was on that plane. So what do we know about the fate of Prigozhin?
Yes, and that is a key question at this point because we have seen there is this plane that has allegedly now landed in Minsk. Remember, there was this idea that Lukashenko had cut a deal between Vladimir Putin and Prigozhin so that Prigozhin would head to Belarus and essentially stop creating trouble in Russia. What Vladimir Putin yesterday said, however, without naming Prigozhin by name, is that the masterminds behind this rebellion would be brought to justice. There is some confusion today, however, because the MOD appears to also be saying that the investigation is closed. The key, however, is that we have not seen yet Prigozhin in 48 hours. We have not really seen the man in action. No footage, no pictures. We did get, or we got yesterday, I should say, a voice note, an audio file from the head of Wagner suggesting that he did not intend to topple anyone or overthrow the government, that this was not the goal behind it. But again, a lot of questions as to what Prigozhin and his fate may look like in Belarus.
Yeah, frankly, that was just bizarre hearing him say that he didn't want to try and topple anyone. Maria, thank you so much. Maria Tadeo there in Brussels for us, looking, of course, at the implications of the war in Ukraine longer term. Now, joining us now, I'm delighted to be joined here in Sintra by Guntram Wolf. He's the Chief Executive Officer of the German Council on Foreign Relations, previously of Bruegel. Guntram, it's great to speak to you here. So we're talking monetary policy, but actually we have to figure out what kind of weekend we live through, because it's just bizarre, I have to say, and it's unclear what the steps were and what the consequences of the 72 hours starting on last Thursday were. What implications do you think it has longer term?
Well, look, I think the word bizarre is exactly the right word. We don't know what happened. We don't really know what's behind it. I think there's a lot of uncertainty as regards to longer-term implications. One thing is clear. What happened is what I would call like a black swan. Everybody knows at some stage something big will happen in Russia. Russia is in a mess. Putin has been running the country like a mafia state. There have been the buildup of paramilitary and military mercenary forces. So you give up the monopoly of power, which is always dangerous as a state. And at some stage, depending on how this war goes, you know, the whole thing will perhaps even collapse completely. And so what we've seen here is sort of one puzzle, a piece in the puzzle towards this collapse.
So is Vladimir Putin significantly weakened by what happened at the weekend?
Well, I'm less sure. I think he was weakened certainly on Saturday when the whole thing happened. But it looks now as if he's sort of consolidating power. He's getting back Wagner troops under his control. I think actually he might get out strengthened. I'm not so sure that he would be weakened.
But Gunter, if you expect some kind of black swan event, so Putin losing control or some kind of unstable Russia state, I mean, this is worst case scenario for everyone. So is there anything that the US, the European Union, and also China can do now to either stop that or certainly try and contain it?
Well, I mean, that's always the big question. I mean, you want a stable Russia on the one hand, but you don't want a Russia like the one of now that is basically attacking and, killing people around the world. So I do think we will have a period of instability, which is unavoidable. While it happens, we need to be ready to intervene, and I think China should also be ready to intervene. But without, this system breaking down, we will never have a stable European peace order.
I mean, it depends on who and what comes afterwards, right? If you had a President Prigozhin, would he have been more unstable for the world than President Putin?
Well, I mean, that's very difficult to predict. I mean, I think really Putin has been pretty bad, right? I mean, so getting someone worse than Putin for the rest of the world, I mean, it's not an easy task, right? So,
talk to me a little bit about how Germany fits into all of this. So, economically, it's a very tough time actually for German corporates. Does it make it much of a difference to what happens longer term? Is it confidence, or is it actually what they're seeing in the real economy?
Well, look, Germany has adjusted tremendously last year due to the energy price shock, and it has adjusted politically enormously. I mean, at the beginning of the year, during the fall, it was actually very difficult to convince the German government to deliver weapons to Ukraine. Now Germany has become the third most important deliverer of weapons to Ukraine. The commitment to Ukraine, the Ukrainian security, is by now quite widely shared. So I think a lot has been done, a lot has moved. But having said that, Germany is still in state of denial on how it should work and shape its relation with China in the future. That's the big thing, the big question. German economy is very much interlinked with the Chinese economy. And obviously, it's hard to sort of just give up on that very good economic relation for security reasons. And so at the moment, there's this big debate also among different coalition parties. Who should, how much should we decouple, de-risk from China, and how should we do it?
How's the Chancellor doing? Would Angela Merkel have handled all of this differently? I don't know whether she would have dealt with, we know that they had a personal relationship and she spoke Russian. Would have history gone a different way?
Yeah, I'm not so sure. I actually do think that Putin really became quite crazy and increasingly crazy, and I don't think Angela Merkel would have changed the course of history here.
When you look at China, we also found out today that actually Janet Yellen is going to Beijing early July. Do you see relations stabilizing between the U.S. and China? Although we're also in an election cycle in the U.S. with so much of it trying to antagonize China to get votes.
Yeah, I mean, I do think the Blinken visit to China was very important. I also do think the Yellen visit is going to be very important. So there is somewhat of a stabilization of the bilateral relations. But look, I mean, China has a long-term vision of the world, and one key issue is going to be Taiwan. And the question is, will, at the end of the year, when there is perhaps some uncertainty politically in the US, will there be a moment of reckoning where China might decide to move on Taiwan? We don't know. I mean, but that's the kind of events we I think have to all, also as business people, we really have to think about, because if it happens, it's going to be so divisive, it's going to be so difficult to steer, it's going to be really leading to a fragmentation even of parts of the world economy.
So, Gunjan, do you think they will? And actually, if they do, does the West have, you know, the firepower to counter out this?
Well, I don't know if they will. I think nobody really knows, except perhaps President Xi himself. The West is relatively well prepared, but a lot depends on whether the US and the EU, Europe, can really pull their act together. The US alone is going to be long-term not big enough. I mean, they will need, also in terms of ammunition production, they will need Europe for sure.
Guntram, thank you so much for joining us. Guntram Walther, the Chief Executive Officer of the German Council on Foreign Relations. Coming up, we'll have plenty more on monetary policy on the back of Christine Lagarde's comments at the ECB's Central Banks, of course, forum here in Sintra. Now, Portugal underlines, here in Portugal, she underlined the hawkish stance from the ECB, so we'll have plenty more on that next. This is The Pulse.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew, alongside Kaylee Lines, deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
It is unlikely that in the near future, the central bank will be able to state with full confidence that the peak rates have indeed been reached. Bearing a material change to our expectations for inflation, we will continue to increase rates in July.
ECB President Christine Lagarde there speaking at the introductory speech here in Sintra, Portugal, just minutes ago. Now, here with me, Bloomberg's Jana Randa, who covers the ECB for us. What you don't know is that she briefs me every morning just so that I have the right topics that we need to grill our guests on. Look, Christine Lagarde was sounding quite hawkish. What does that mean for a September hike from the ECB?
Well, she had a little preface to her speech which said she wasn't going to give any policy message, so we shouldn't infer from right. But she did sound very hawkish. She said inflation was much too high for comfort and has been for much too long, which means that one comment that I found remarkable is she said we cannot say with full confidence that in the near term that interest rates have reached a peak. So that tells you a little something. She didn't mention September, but clearly there is a lot of concern about inflation being too high, about it not coming down as quickly as policymakers want. And she had quite some messages saying inflation expectations need to be anchored. She said companies need to absorb some of the wage pressures we've seen in their margins to make sure that demand is coming down and that inflation actually can come down as well.
But yeah, I mean, there are two things, right? So first of all, is the hike, so where we reach peak rates, and then how long they'll stay there for. The market believes there's some kind of cuts coming next year, and she really pushed back against that.
Yeah, exactly. I mean, the policymakers at the ECB are very, very concerned that somehow there is this idea they reach peak rates, they hold for 2 months, and then they cut again because inflation is coming down, and they're really pushing back against that. Inflation, if you looked at the forecast, it's expected to remain stubborn. It's coming down only slowly in the projections, and if you want to keep on that trajectory, they believe they need to keep restrictive levels for longer. And in fact, we had Martins Kazaks, the Latvian central bank governor, on this morning, and he told you that no rate cuts in the first half of next year. So that's as blunt as it can get, really. We don't even know when we will reach the peak. Once we're there, don't bet on cuts. So that is really the message they want to drive home, and that is to anchor inflation expectations and make sure that we're not getting into a worse situation than we already are in.
Yeah, he seemed to believe that actually lesser of two evils is over hike. Thank you so much, Jana Randau, there from our ECB team. Now, as our coverage, of course, continues from Sintra, in a short while, we'll be talking to the Lithuanian central bank governor, and then a little bit later today, we're joined by the Slovenian central bank governor. In between, I think we speak to Gita Gopinath, a deputy, also managing director of the IMF, and then tomorrow we continue our coverage with an exclusive interview, the ECB vice president, Luis de Guindos. This is The Pulse.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power, the
balance of power. Live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lines.
The door was open
for regulators to do more. And that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions. This is Bloomberg Surveillance Early Edition with Danny Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Putin responds. The Russian president denounces leaders of the Wagner Group as traitors in his first public comments since the aborted mutiny. China's premier calls on countries to cooperate as global challenges and regional conflicts keep flaring up. That warning comes as U.S. Treasury Secretary Janet Yellen plans a visit to Beijing. And Christine Lagarde delivers the opening speech at the ECB's annual forum, maintaining a hawkish tone. We're live in Sintra, Portugal, with a member of the ECB Governing Council. Happy Tuesday. Welcome to Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Kriti Gupta is in New York. Kriti, maybe no clear catalyst today, but you can definitely say we're nibbling around the edges of risk after yesterday's sell-off.
Perhaps just a little bit more appetite, Danny, but it's interesting. At the same time, we have geopolitics still kind of playing a little bit of a role in the background with the Russia story and the developments we are getting out of there. But a lot of the narrative is turning right back around to the central banking story, to the growth story, some reassurance perhaps coming overnight from China. And I think that perhaps is what's driving the trade here. This idea that even in the face of slow economic growth, something that a lot of people are concerned about kind of being exported to the rest of the world from China, you perhaps are still seeing some support from the PBOC, and that is important, again, when it comes to the read-through for the rest of the world. I'm going to start from the bottom up here, Danny, because that is a big part of what drove up the Asia session. Simply this idea that you did see right at the onset a stronger than expected fix when it comes to the yuan. And this is important because this is the biggest spread you've seen from the daily estimate to what actually happened this year. You have to go all the way back to last year, early last year, to find the last time we saw this kind of spread. Now, what's important here is that it essentially signals that the PBOC is not accepting, I'm going to get that word right, a weaker yuan. And what's important is that it continues to signal that because that's what's going to prop up the currency. As a result, you do see dollar weakness and strength in those China-exposed commodities, copper, iron ore, commodities like that. As a result, the Chinese trade is then perhaps seeping into sentiment, at least in the U.S. trade. Zinc futures higher by about 0.2%. I wouldn't call it major momentum, major conviction, but perhaps, as you put it, nibbling around the edges of risk appetite. What's interesting to me is at the same time you have that nibbling around the edges, Danny, you see a pretty big bid into the front end of the market, especially when it comes to the bond market. The two-year yield, 468. It's only 5 a.m. in New York and already seeing a move about 6 basis points lower there.
Yeah, I wonder, at least when it comes to equities, how much of this is kind of month-end weirdness that maybe you want to sell equities, maybe you want to buy bonds. If that's the move you're doing, we've, of course, had this really big run-up. Deutsche Bank pointing out that we haven't had a 3 to 5% sell-off in some time. maybe we're due for it. But again, nothing to necessarily push us there. A lot of markets unchanged in Europe this morning. FTSE 100, that's barely changed. We've had a really tough run for the mid-cap index, those concerns about the UK economy. Bloomberg Intelligence says that we're heading for recession in the UK by winter's time. FTSE, MIB, IBEX, those performing a little bit better. So on an index level basis here in Europe, we are struggling to maintain any gains. We were up this morning. We've started to fall out from that. We're down about 0.1%. One of the worst performing stocks is EQT. This is a private equity giant. It is the third biggest private equity firm, judging by how much they've been able to raise over the past 5 years. So then perhaps it is troubling, according to people familiar, that they've had to extend their fundraising timeline for their 20 billion euro fund. If EQT is having a problem fundraising, probably everybody is. Again, this is such a brand name here in Europe. Now, Kriti, we mentioned that we are in Sintra, Portugal. It is the forum for the ECB. So far, we've really just heard from the hawks. We've heard from Kazakh saying that we want at least one more hike in July. Too soon to say whether that is the only one. Christine Lagarde saying that they need to get down to 2% come what may, sounding her hawkish self. So the euro gains. Sterling, that is also gaining. We did have an inflation report about groceries. Those have come down, but Kriti at 14.6%. Food inflation in the UK is absolutely still too high.
Certainly a story that we are watching as we continue to monitor the cost of living crisis over in the UK and broadly, I would argue, Europe and the rest of the world as well. Danny, geopolitics still at the center of the conversation, especially when it comes from the fallout of the Russia story over the weekend. Vladimir Putin has now condemned the Wagner mercenary group as traitors to Russia. The president made a late-night speech to the nation, his first public comments since the mutiny that posed the most serious threat to his almost 25-year rule.
Дорогие друзья,
dear friends, today I address once again all Russian citizens. I thank you for your endurance, solidarity, and patriotism. Civil solidarity showed that any ransom, any attempts to organize internal unrest are doomed to fail.
Joining us now for more analysis, Bloomberg's European correspondent Maria Tadeo. Maria, Interfax reporting in the last hour that Wagner will hand over heavy weaponry to the army. Is this the beginning of the end for the group? What are you hearing?
It really could be, and it looks that way. We have today the Russian MOD, the Ministry of Defense, saying that Wagner has now agreed to transfer some of their heavy weapons to the Russian army. You remember also yesterday, Vladimir Putin gave them 3 options. Those who did not participate in the march to Moscow could either join the actual army, the Russian army, they could go to Belarus, or they could go back home. What we're seeing here is what could be the beginning, as you say, of the end for Wagner. At the same time, we know that Prigozhin, who led this group of mercenaries, his future is also unclear, but it is by now almost established that Vladimir Putin, to some extent, even though the optics are bad, has managed to contain the situation. And again, the question is, if you're Wagner, you don't have the weapons, your leader is nowhere to be seen, and you don't have any troops, do you even exist? At this point, it's fair to say, well, not.
What do we know about Prigozhin and where he is and what his fate might be?
Look, that's a very good question, and there's a lot of confusion because we know that yesterday he put out a voice note, actually 11 minutes long, where he explained some of the reasons for the events that took place on the Saturday. He said and repeated he did not want to overthrow or topple anyone. We know that yesterday President Vladimir Putin, however, said the masterminds behind would be brought to justice, but we have another twist in the saga. The MOD today now says the investigation into mutiny appears to be closed, so that would be perhaps good news for Prigozhin. We know that there is a private plane that allegedly belongs to Prigozhin that has landed in Minsk, that is in Belarus. We also heard this morning from Alexander Lukashenko saying, I will honor my part of the deal, that is to host Prigozhin. But the big question is, where is he? Nobody has seen footage, pictures, nothing. We still don't know where this man is.
Maria Tadeo covering every angle of that story. We'll keep you updated from Brussels. Thank you, as always. From Russia, we go to China. China's premier warning governments against politicizing their economies, saying it would only fragment the world. He spoke in a keynote speech to global business leaders.
Some in the West are hyping up the so-called phraseologies of reducing dependencies and de-risking. These two concepts, I would say, are false propositions. Governments and relevant organizations should not overreach themselves, still less overstretch the concept of risk or turn it into an ideological tool. We should oppose the politicization of economic issues and work together to keep global industrial and supply chains stable, smooth, and secure. Without peace, nothing can be achieved. This is a hard lesson humanity has learned from history.
Joining us now is Bloomberg Asia government and politics correspondent Rebecca Chung-Wilkins. She does a little bit of everything. Rebecca, is this really a new message coming out of China?
Well, it's Li Qiang's only his second major public speech since he took that job as premier. And the tone, I would say, did strike sort of slightly differently to the other messages we've had from authorities recently. He was very sanguine and really quite positive and bullish about prospects for China's economic recovery. Really confident that China would meet its target, and also that it had sort of positive momentum. Now, that's slightly at odds with the messages we've had separately, which emphasize, for example, the challenges that China is facing and acknowledging the need that some kind of stimulus, some kind of support, for example, for the property sector is still needed. Now, there wasn't any mention of that by Li Qiang, and that's really what investors are looking for, any kind of clarity over what substantive stimulus we may or may not see. And all of that, as you say, was sort of wrapped in this message, this warning to the US and its allies that this push to curb China is fragmenting the world economy.
And then at the same time, I don't know exactly how this bodes. You have China banning a prominent financial commentator on Weibo who had some 4.7 million followers because he commented on the stock market and unemployment rate. Rebecca, you combine that, and then you combine a Janet Yellen who is planning to visit Beijing shortly. What does all of this mean for foreign investment in China?
Well, I think it's clear that from Beijing, the messaging around what's happening in the economy is still very, very tight. And clearly, they are still sort of trying to work out precisely what they're going to do to support the economy. All eyes for foreign investors in particular are on this July Politburo meeting, whether we see any more measures to support the economy. Then, of course, this Janet Yellen meeting happening at a very sort of interesting time, prospectively going to happen in early July, and late July is when we may see that executive order being confirmed by Biden that may look to regulate or even constrain some of US investments into China. I think the broader message, if we do see this Yellen trip going ahead, the second cabinet member by the US to visit China after Blinken, of course, if we do see that going ahead, there will be another sign that perhaps China and the US may be finding a way to disagree together. Even as tensions continue, conversations at the high level are still managing to roll on. So that might be a sort of brief glimmer of hope for some foreign investors.
Okay, Rebecca, thank you very much. That is Bloomberg's Rebecca Chung-Wilkins. Now, over here in the UK, Odey is suspending its flagship hedge fund after being hit by redemption requests from investors fleeing the firm. Bloomberg finance editor Michael Moore joins us now with the latest. So, Michael, it's not just some of these firms, some of these funds on the sidelines here. This is their flagship fund they're now suspending.
Yeah, and in some ways it's not a surprise because Crispin Odey was the main portfolio manager on this fund. You have to imagine that fund has shrunk in recent years. Those who had held on truly seem to be believers in Crispin. So now that he's gone, you kind of lose that superstar who was running that fund. So both funds that we're seeing today, the flagship and the other one who are suspended, were both had Crispin Odey as a portfolio manager. We've also seen other funds that he didn't run also have to be suspended because of the redemption requests. The company is trying to reassure investors and keep them on board despite all the turbulence.
So that is the Odey story. Michael, talk to us about the Credit Suisse story. A fine of just shy of about $1 million, which, to be fair, is only $1 million for a major bank. But talk to us about why they were fined in the first place.
Sure. So this is about bond reporting and reporting of prices. This went on for a number of years. We've seen other banks run into this issue as well. I think what it kind of indicates You saw them agree to the fine on the same day that the UBS deal closed. And I think this just points to UBS has said there's $4 billion roughly in legal settlements and other costs that they're expecting. They want to knock out as much of this as possible in the short term to try to clear some of those books as they go through this massive integration.
Yeah, and I guess 900,000 is kind of peanuts in the grand scheme of things here compared to $4 billion that they have to get through. Michael, thanks so much. That is Bloomberg's Michael Moore. Now, coming up, we're going to go live to the ECB forum in Sintra, Portugal, with Lithuania's central bank governor, who's also a member, of course, of the ECB Governing Council. That's Gediminas Šimkus. That conversation shortly. And Wisdom Tree's Anika Gupta sees a high risk correction in this equity market. We're going to get more on that later this hour. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
It is unlikely that in the near future, the central bank will be able to state with full confidence that the peak rates have indeed been reached. Bearing a material change to our expectations for inflation, we will continue to increase rates in July.
ECB President Christine Lagarde there speaking at the ECB forum in Sintra in the last hour. Bloomberg's Francine Lacqua is also there in Sintra on the ground and joins us now with a member of the ECB Governing Council. Francine.
Yeah, thank you so much. I'm delighted to be joined by Gediminas Šimkus, of course, for a good conversation, or a robust conversation, I would say, on whether the speech by Madame Lagarde was too hawkish in his eyes. Thank you so much, Governor. When you look at what we heard from Christine Lagarde, we heard two things, at least I heard two things, that inflation is a problem, that they will continue hiking, and then we could and should be ready for higher for longer interest rates. What is the market misunderstanding right now?
Well, so I really need to agree that, you know, there is still some ground to cover. We are not done with hiking, and I cannot conclude, you know, that we would have the last hiking in July. But let's wait and see for more data, for projections, and we'll decide. What's very important that we talk a lot about the current headline data, current headline inflation, current core inflation. But what the monetary policy does, it attacks the inflation forward look in the future. So what we need to make sure, and make sure by keeping interest rates in the restrictive territory as long as it is needed, that the inflation in the medium term gets back to where it has to be, 2% target.
But so what happens, so you're staying there until you see inflation come down. With it, we'd probably see a protracted recession. I don't know whether that's in your base case. And then do you cut rates straight away, or do you keep it there for a little bit longer?
No, I mean, you know, we try to draw a certain strategy in advance, but what's very important that data is constantly changing. So in a way, we are consistently surprised by the more, so to say, more stick inflation as we have been thinking before. So it's very important to understand that, you know, like in 3 months, in 6 months, we will take the decisions on the basis of data that we have at that moment. So I think it's a bit premature to draw exactly what could be the path. Yeah.
But Governor, and I understand you're data dependent. I understand this is tricky, but why are the forecasts so wrong or so difficult to get ahead of? And at the same time, because you've raised rates so much, what if it catches up and you see a downturn very quickly?
Well, I don't think this is very much plausible scenario, right? So what we do, I mean, let's look at the data that we have now in hand. So first, inflation is, wages are growing twice as much as like a long-term average, and will keep growing like next year and the next year. Second, we saw that we had an inflation. Inflation was also pushed by increased margins of the companies, right? So then the question is, how would they decrease? To what extent they would decrease, and to what extent the companies will push through, you know, the increase in costs towards the final prices of goods and services. Energy, I mean, it fell down, but you know, now it's at the level that is twice as big as they were before pandemics. Again, there is some so to say sensitivities, you know, and how the prices may change. Food price inflation, it's still very high.
Are you talking about the instability in Russia and what that may be for energy prices going forward?
Absolutely. I think this is the black swan. So, I mean, I'm sure that Ukraine will win eventually, but there's like real war happening there. Russia, real war happening here, and what we saw, you know, over the last weekend. So the things might start, evolve, and finish very quickly in an unexpected way. And whatever is the outcome, I mean, it will have some economic consequences.
Governor, are you concerned that if there's no hike in September from the ECB, then there's going to be some kind of spiral that, you know, wage increases, price increase, and it's something structural that the ECB will really struggle to get ahead of?
So you said that there's going to be no...
Are you expecting a September hike from the ECB?
I think there's going to be so on the table, and we will make decision on the basis of data. So I cannot, you know, say at this moment that, you know, that we're going to hike or we are not going to hike. What's clear, we're going to hike. I think we need to hike also in July. But getting back to the question on the wage price spiral, I don't think we have this kind of phenomenon at the moment. Why? Because I tried to explain, you know, wage price spiral as a certain spring, which is compressed by expectations. So, and it is compressed. So when you look at the expectations by market analysts, to consumer expectations, you see that they are not diverged from 2% target in the medium term. So this spring is still compressed. Yeah. Our goal is not to unleash it.
Okay, what would you do to vote for a pause? So what would it take for the ECB not to continue hiking?
Well, so we should not mix it up, you know, the means and the goals.
Yes.
We are talking about the means. Hiking is means how to put inflation to the cage. So inflation, this is in our mandate, is indisputable, and they need to get inflation back to the target. So we will hike, we won't hike, or we will keep interest rates as long as it is needed to put inflation back where it has to be.
But if you look at the timeline, and again, do you wait for inflation to be 2%? Does it have to be on a trajectory down? Like, how are you thinking about the mechanics of when the right time to pause is?
That's a very good question, and you know, there are a lot of discussions. What's the difference for the medium term between inflation 1.9 and 2.1? I mean, whether you hike or you won't, so what's the data? But the main thing for me, I think that we see that inflation is consistently, determinably, is getting back to 2% target. So far, you know, with the best technicians at the ECB and at the national central banks, we still see that we still, so to say, have inflation above 2% in the medium term.
Yeah, but so why not commit to a hike in September then? And say, look, July will hike, September will hike.
I mean, the environment is such uncertain. There are so many factors that are affecting the economy as well as the inflation that there is no point to commit. So we should not exclude the possibility that we're gonna hike, that we might hike in September too, and that's what I'm saying. I will not be surprised to continue hiking also in September.
So the ECB, and it's crazy actually to look back at the last 12 months and the fact that when we were here in Sintra last year, since then the ECB has hiked 400 basis points. What surprised you the most in those 400 basis point hike? That nothing is broken, that inflation is still high, that monetary policy takes longer to impact the economy?
Well, what surprised me is that we are talking so much about the current headline and core inflation, also understanding that the effects are coming into effect only at least in 18 months. So that's one thing. The other thing, what surprised me about the economy, that having also the contracting, even imaginary, but still contracting economy, euro area economy, last quarter last year, this first quarter this year, we still have so resilient, so tight labor market with unemployment even falling. I know that there are many explanations why it could be so, but still, it's in a way a bit, so to say, contradictory according to the standard textbooks. And this like pictures this economic landscape that we are living now in, again with somewhat different colors. The same differently as we were living through the last 3 years, like starting with COVID pandemics, the effects, supply shocks, Russia's war against Ukraine and all the consequences. This is again like new colors into this new economic landscape.
You're right, we haven't seen this in a textbook. So is this because of COVID? Is this a structural change in the economy? Or are we just delaying a sudden downturn?
So sometimes I like to see, I see my countries like Baltic states as certain, small, open, very liberal market economies, which like leading indicators. In Lithuania, we do see that there are some changes in the labor market already. And also we do have this technical recession at the moment. So like, yes, I understand that in each country there could be also a different story. But in euro area, even with this contraction, actually the economic is getting back to the growth. So we need to admit this. And the wages started growing, and there's going to be a real wage growth, implying that the consumption will be better. So there are factors that might think let you think that the labor market will continue tight. In particular, I think there is one more important thing. Why, in such an environment, companies do not lay off people?
Why?
I think it's because they think that this contraction is just short-term. So they, as Madame Lagarde was explaining, they are hoarding people, they are hoarding workers, because they know in the tight labor market, if they lay off them, they won't be able to find them.
Are you suggesting this is a mistake?
No. I'm not suggesting this is a mistake. I think there are many downside risks, but when I look at the euro area's economic projection, I see growth, like annual growth this year, even better growth next year.
Governor, thank you so much, as always, for your time. That was, of course, the Lithuanian Central Bank Governor, and with that, I'm going to send it back to you in New York.
Francine Lacqua in Sintra with Lithuania Central Bank Governor, she said, who's also a member of the ECB Governing Council. I have to say the standout comment was at the very end there. The idea that there's growth this year, perhaps even more growth next year, kind of contrarian to some of the recession calls we were hearing from around the world. Coming up, Anika Gupta, Director of Research over at Wisdom Tree, joins us next. How do you trade this environment? We're going to ask her. Stick with us. This is Bloomberg.
venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone. Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Putin responds. The Russian president denounces leaders of the Wagner Group as traitors in his first public comments since the aborted mutiny. China's premier calls on countries to cooperate as global challenges and regional conflicts keep flaring up. This warning comes as U.S. Treasury Secretary Janet Yellen plans a visit to Beijing. And Christine Lagarde delivers the opening speech of the ECB's annual forum in Sintra, Portugal, maintaining a hawkish tone. Moments ago, Governing Council member Gedimina Simkis echoed her sentiment, saying the ECB is not nearly done with hiking up rates. I'm Kriti Gupta in New York with Danny Berger in London. Danny, geopolitics aside, the narrative is very quickly coming back to exactly what these central banks around the world are going to be doing. The ECB, on the one hand, sticking to that hawkish tone. The PBOC, on the other hand, taking a very different stance.
Yeah, okay, maybe we've seen a hawkish tone from the ECB, though, Kriti, because we've really only heard from the hawks so far at Sintra. I mean, Christine Lagarde, chief among them, literally chief among the central bank. Shimkiss, another one who leans more hawkish. So that's what we have heard, that folks there say definitely July and maybe definitely not ending hikes in July. So you are looking at a stronger euro versus the dollar today. We're still under that 110 level. Can we finally crack that despite the strength that has been trading in quite the range? Now, meanwhile, it's a soggy day for risk here in Europe. We're about the lows of the session, down over 0.1%. Leading some of those declines, one of the worst performing stocks is EQT, a private capital giant based in Europe. One of the biggest funds in the world has had to extend their timeline for fundraising, so that's dropping more than 4.5%. Sterling really struggling to hang on to any strength this morning. We did get some shop price inflation from the BRC in today. It has cooled off somewhat, but still those figures are really high, but still most of these currencies strengthening against the dollar, Kriti.
Well, and that dollar weakness absolutely extending to the Asian session as well. Before I get into what we're seeing stateside, I want to talk about the Asia story because, of course, overnight we did get a stronger than expected fixing that did send, of course, the offshore yuan much higher relative to the dollar. We're looking at 7.23 on that rate. Again, this is the strongest level you have seen going back to about 7 months. And at the same time, it pushed things like copper, iron ore much, much higher. But you can see already that copper pairing a lot of those gains now almost virtually unchanged on the session, which brings us to what we're seeing in the U.S. trading day, at least early on. The futures higher by about 0.2%, perhaps a little bit of optimism, but again, not a ton of momentum, not a ton of conviction, because then you pair that with what you're seeing in the bond market, Danny, which is a massive bid into the front end of the curve. Not exactly something you would traditionally see in a kind of risk-on environment. 4.69 on the 2-year yield.
Yeah, that yield curve continues to flatten. We're at one point at 102 yesterday, which just gets us to the point, if this market is starting to price out cuts, they're finally listening to some of the hawkishness. Do you want to continue that trend? Joining us now is Anika Gupta, Director of Research at WisdomTree. And Anika, perhaps that's some of the reason we're seeing stocks or seeing risk assets a little bit lighter. Do you want to follow this trade? Are we starting to enter a hawkish-fueled sell-off, or is this just some month-end, quarter-end rebalancing?
Very good morning, Danny. No, I think it's a mix of, rising geopolitical risks that did spook the markets over the weekend. And alongside that, we're getting, more and more hawkish calls from a number of central banks. We started off the year hoping for a Fed pivot coming in much earlier than expected. We've only just arrived at a pause. And, look at central banks in Europe. Here in the UK, we've had a much more aggressive rate hike being posted just last week. And, polls at Sintra remain hawkish. We've just heard Christine Lagarde also reiterate that message. So that's clearly, a headwind for stocks, because so far stocks have been gaining because of profits. Stocks have been gaining because of rising liquidity. And if central banks continue on with this message, continue to raise rates, and at the same time, tighten a monetary policy, that's gonna have a big impact on stocks.
Is there some degree to which we're just overextended? Deutsche Bank thinks we're due for a 3 to 5% sell-off because we haven't really had one in March. Is there some element of that? We've just gone a little bit too far here?
Well, I would predicate it largely on what have been the key drivers of stocks so far. They've largely been ample amount of liquidity. Companies have been posting pretty strong profits so far. And then if you look at stocks relative to bonds, dividend yields and earnings yields have been relatively attractive. That's all flipping over now. So stocks are not looking as attractive. If you look at dividend yields versus bond yields, they aren't looking as attractive now. Liquidity is being drawn out from the system, and profits are expected to come off. So if you have the three main tailwinds that were driving stocks forward in the first half of the year now start to turn the corner, that is going to likely put a lot of pressure on stocks in the second half.
But Anika, from a fundamental point of view, does that then change kind of the idea of just how quickly a lot of these companies adapt to, like you mentioned, the liquidity environment that is becoming less liquid, as you point out? Do you see kind of more incentive to invest in things like R&D and innovation? And could that, at the end of the day, have a more fundamental tailwind to the market?
Well, I think the name of the game, as we've seen so far, is companies that have been able to operate in a more lean function, companies that have gone ahead with a lot of cost cutting or even layoffs have actually been rewarded by the market. So I think a more proactive stance that has been taken by a number of tech companies has actually benefited those very sectors. So I think, companies will definitely have to be thinking on their feet at a time when liquidity is being squeezed.
Well, speaking of that liquidity getting squeezed, I want to bring to you a call from this morning coming out of Morgan Stanley. Ellen Zentner, the chief U.S. economist there, writing, quote, "We now think the Federal Reserve will hike in July. Our data forecasts have not changed, but our perception of the Fed's reaction function now points to a significantly lower bar to hike. We've added a 25 basis point hike to our policy path." Anika, that brings me to you. To what extent are these hikes being added in by a lot of these economists, strategists, and eventually the bond market as well, priced into the equity market?
Well, as far as probabilities are concerned, we are seeing an 80% probability for the July rate hike. So I would definitely agree with that view. And in terms of how it's getting priced in, we are seeing credit spreads now beginning to tighten. And as those credit spreads begin to tighten, that's clearly going to, squeeze companies' corporate spending plans and their capex spending plans, and it's going to make them think twice about their expenses and their borrowings going forward. So, how I see it playing out into the economy is definitely via tighter credit spreads. We already saw that in a number of the bank lending surveys that we received in Q1. that did show that a number of banks are tightening lending standards. Obviously, we've also had the banking crisis that's made them even more cautious. And that's an important factor that's going to play on companies' capex plans for going forward.
Anika, elsewhere in the world, over the weekend, we had this rising up of tensions or mystery. I don't know exactly how you want to describe it, but concern here with the Wagner Group and a potential mutiny. Now, most of it has kind of gone to simmering in the background again. But these sorts of flare-ups, does it change your mind? Does it make you rethink how we should be hedging and trading around geopolitical risk?
Absolutely, Danny. I know it appears as if it's gone into the background, and thank God it happened over the weekend. But I think it's a telling sign that investors should be prepared and ready to hedge these geopolitical risks that continue to haunt us and continue to repeat right across 2023. I would also caution that I don't think this is the beginning. This isn't the end. I think it's the beginning of a number of events that could unfold over the course of second half of this year. And I think one way to actually hedge those geopolitical risks is via commodities. Commodities stand to benefit when you do see these geopolitical rise, especially when the conflict involves Russia and Ukraine. We saw that play out in agricultural commodities. We saw wheat, given the fact that Russia and Ukraine are nearly the breadbasket of Europe and account for nearly 25% of grain supply. We saw these commodities actually benefit in the slipstream of this event taking place.
Well, there's also been really dry weather, which means, they've come down from it, but we've seen wheat, corn, soybean, all those kinds of agricultural products really spike up in the past month. How do you kind of judge that too? How do you put weather into your consideration? These are things, Anika, that are, really hard to control. You either need a military analyst or you need a weather forecaster to try to understand this.
Absolutely. It's an unknown risk that exists in the market. And I think it's interesting to point out, over the last 3 years, we've had a repeated, cycle of a weather phenomenon called the La Nina. And this year, beginning July, August, we're going to start to see, the El Nino cycle actually take fold. And what that essentially means is you're going to have a much more warmer weather temperatures across the Pacific, which essentially results in extreme weather conditions in certain parts of the world. So take, for example, in the US, you're going to have extremely dry conditions, whereas in parts of Central Africa, you also have very dry weather conditions. And essentially, as a consequence of that, you tend to have places which are have a large concentration of certain commodities, such as in Africa, you have a large concentration of cocoa. That supply gets squeezed, and hence you see a shortfall in the market, and as a consequence, you see that being a very price positive environment. So hedging that extreme weather risk and having that weather premium in your portfolio would be a prudent decision to make.
Okay, Anika, thank you so much for joining us this morning. That is Anika Gupta of Wisdom Tree. Now, coming up on the program, Russia closes out its investigation on the Wagner mutiny. That's according to Interfax. We're going to get the latest next. This is Bloomberg.
For the first, call it 18 years at Chipotle, This was, you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
We gave Putin no excuse to blame this on the West or to blame this on NATO. We made clear that we were not involved. We had nothing to do with it. This was part of a struggle within the Russian system.
U.S. President Joe Biden there in his first public comments since the Russian revolt. Joining us now on the ground in Kyiv is Bloomberg senior reporter for international affairs, Mark Champion. Mark, can we call this a revolt? I mean, we've heard Putin make the first comments of it, condemning the leaders of the Wagner Group, but I mean, they stopped short of taking further action.
Well, they did. I mean, they did revolt. They crossed the border. They marched towards Moscow, and they shot down some planes. So, it was a serious moment, and now it seems to be more or less over. There was a very interesting speech that Putin gave, short and to the point, but if you listen to it carefully, he prioritized really the things that he's concerned about. First, he said that he thanked everybody for being completely unified around him, the state and Russia, which wasn't exactly how it looked. Second, he said, we were very quick to make decisions. Again, it wasn't exactly how it looked. He just said it took a while to happen, and that they had everything under control in terms of, they would have been this would have been crushed eventually anyway, even without an agreement. But it wasn't obvious that the army had mobilized to do that. And finally, he reached out to Wagner, to the group and to its soldiers, and said, we're going to make space for you. We think that you're patriots, and I'm going to stand by a deal so that you can either join the defense ministry, go home, or go to Belarus. So he's trying to draw a line under it, but also to eliminate the sense that he was exposed as being weak or not properly supported.
So the end of the conflict, perhaps, but is it the end of the Wagner Group specifically? And the reason I ask, Mark, is simply because we're approaching that deadline that the Defense Ministry had put for a lot of these soldiers to sign on. I believe it's July 1st, so coming up this Saturday. That being said, Interfax in the last, I want to say, hour and a half or so, also reporting that some of the heavy machinery now going to be transferred from the Wagner Group to the Defense Ministry. So is this the end of that group?
I think that we don't know yet. I mean, they have a lot of operations in Africa, and those are extremely useful to Russia. We have to remember that he was really a creature of the system, and this was an intra-system dispute. It's in some form, I'm sure that Wagner will continue, even if it's absorbed into the state structures, or there's someone else ends up in charge, or Prigozhin. We still don't know that. He has been. We believe he's in Belarus. We still don't know, and there are reports that Lukashenko in Belarus, the leader of Belarus, has ordered the construction of a base for some thousands of Wagner troops. So we'll have to wait and see, what the fate of Wagner is.
Mark Champion joining us from Kyiv. We appreciate your live analysis as always. And we go from the politics in Russia to the politics right here in the United States. Former President Donald Trump is heard discussing what he calls secret information in an audio recording of a 2021 meeting in New Jersey after he had left the White House.
They presented me this is off the record, but they presented me this. Isn't that amazing? This totally wins my case, Except it is like highly confidential, secret. This is secret information. See, as president, I could have did less. Now I can't, but this is less.
Now we have a problem.
Isn't that interesting?
Yeah.
It's so cool.
ABC News and other outlets obtained that audio recording of a 2021 conversation. Joining us now for more analysis, Bloomberg's Rosalind Matheson. Roz, walk us through the implications of this to actually have this evidence in the public orbit. What does that mean?
Well, it's interesting because this was actually included in the indictment at the time, but this is the first time that the audio of that conversation has been leaked out into the world. And as you can hear, Donald Trump sort of talking in a semi-knowing fashion that these documents were secret. They were classified, that he didn't have the right to share them, didn't have the right to declassify them, but he was doing so anyway, and that he called that moment very cool. And so that really goes to the heart of the prosecution's case against Donald Trump in a trial that may start in August, although they're trying to push it back to December, is the question of sort of intent and knowing. Like, did he have these documents by mistake, it was unintentional, or did he know that there was an error in keeping them? Did he do that anyway? Did he talk about these documents with other people who didn't have the right to know about the information in those documents? So really what you're hearing is sort of the basis of the prosecution's case against him.
Right, it is such a high bar to clear, to say not only did he do this, but he willfully and knowingly did so. What clue does it give us about what the prosecution is going to mount? You said this was a clue of it, so what other things might they use in order to try to prove, again, that this happened knowingly?
Well, there's a series of examples they're going to use. They've been sort of looking at his conversations, his public statements, and also we can see some of his private statements across the years to sort of show a body of evidence towards, again, that idea that he was very aware of what he was doing and choosing to do it anyway, because again, his argument is that he had the right to keep these things, but he wasn't breaking any law. They're going to say, well, actually, he knew that he was breaking a law in doing so. So the whole prosecution case rests on that episode that we heard a bit of the audio just before, but obviously, we're not even at a trial stage yet.
Okay, Roz, thank you very much for that update. That is Bloomberg's Rosalind Matheson. Coming up, we're going to have a look at some of the U.S. stocks moving in pre-market. This is Bloomberg.
What is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO, so buy high, sell low. And the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Danny Berger in London. Let's take a look at some of the stocks we're watching in the pre-market trading right here in the U.S. Top of mind, Danny, is some of these EV stories. A massive move lower for Lordstown Motors, the ticker for our radio audience, RIDE. Down, get this, 57% in the pre-market, filing for bankruptcy after their Foxconn deal. Yes, this is the chip supplier and iPhone manufacturer. Fell through. Essentially, they had this big partnership on the books. It looks like they warned that this is what would happen if that partnership fell through, and here we are seeing Lordstown file for bankruptcy. At the same time, the likes of Lucid Motors, or Lucid Group, excuse me, higher by about 7%. They're coming, though, with perhaps some investment potential from a Saudi-backed EV supply story. The Saudis getting, I want to say, more and more airtime lately.
Yeah, I mean, look, when you're in an economically difficult time, the price of oil is still kind of holding up. That is what you tend to see. But I got to say, wow, 57% pre-market decline for Lordstown. I mean, this is once a company that was hailed by former President Donald Trump for saving automaking jobs, so quite the fall from grace.
Yeah, and the fallout of the GM kind of production halt as well. A very good point. But as we talk about the EV story, and speaking of production, we should talk about one of the high flyers, Tesla, as well. Higher in the pre-market again, surprise, surprise, higher by about 1.6%. Shares trading at about, we'll call it about $245 a share. But Goldman saying, well, maybe this Tesla rally is going to be coming to an end. And Danny, from a valuation perspective, I mean, if we can even apply valuation logic to Tesla's rally, seeing a lot of green on the screen there.
Yeah, fair enough. But look, it's one of those things of like, do we need a catalyst? There's plenty of predictions in general that some of these more frothy names need to start falling. Deutsche Bank, I mentioned this earlier in the show, said stocks need to fall 3 to 5% just because they've gone too far. Are folks willing to give up on some of those big names? Look, if we get more concerns of a reacceleration of rate hikes, you're going to look to the less profitable names like Tesla maybe to start falling again.
Yeah, especially when those margins are getting squeezed anyway. And I think there's real implications for the benchmark as well, given Tesla's weighting and the read-through into a lot of the other big tech names as well. I'm going to end with one more tech name very quickly, Danny. Snowflake also on our radar. We talked a lot about the AI story. SNOW is your ticker there for our radio audience. Higher by about 3% there. What's important here is they're announcing an NVIDIA AI-related partnership. So look, they uttered the magic phrase, artificial intelligence. The stock is getting a boost. Are we surprised here?
No, I mean, you just say AI in your earnings apparently, and your shares get bid up. I will say, though, some of these AI names have started to come in. For example, AI, the ticker of C3.ai, that's lost most of its gains so far this month. So maybe some of that wind is coming out of the AI trade, Kriti.
Yeah, certainly something to keep in mind when we talk again about how this is all going to be supported.
Yep. Maybe you just can only buy NVIDIA, and that rally will continue forever. All right, well, that's it for Early Edition. Surveillance is up ahead. They'll be speaking with the IMF's Peter Gopinath. This is Bloomberg.
politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lyons.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come. I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
This is Bloomberg.
We are seeing clear signs of a demand slowdown.
We are slowing, there's no doubt about that, but the recession debate continues to go on.
I have a surprisingly positive outlook.
When you introduce this level of uncertainty, it's hard not to see, option price levels as quite compelling.
We find that the value of diversification has certainly gone up quite tremendously.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television Tuesday, in a complete full quarter-ending, first-half-ending week. We're going to go to Maria today in a moment on all going on in Russia, in Belarus, in Ukraine. But I got to look, Lisa, finally today, a wall of economic data to try to figure out exactly where are we. Brief me.
Yeah.
Where are we? Help me.
We don't know where we are. That's part of the problem. We're getting a host of data, including a host of housing data, and I'll get through it here in just a minute. The key question for me is, are we on the downward shift, or are we reverting to some sort of upward trajectory, particularly with the housing market, where we are seeing signs of a rebound? Is there enough softness in a consistent manner across all sectors to give central bankers a sense of ease? Well, that's not the tone we're hearing over in Sintra.
And in Sintra, this is in Portugal. Think Jackson Hole without the Cowboys. Francine Lacroix with Gita Gopinath coming up. I know you're going to talk about that as well. And we're going to start here in a moment with Maria Tadeo. What are you watching with Mr. Putin?
I'm watching to understand who is supporting him, what the relationship with Prigozhin is. He's saying now he is going to honor his word in terms of granting him an amnesty, except that the Wagner troops are being disbanded. It's not a complete chapter yet. There are a lot of questions that remain, including where are the oligarchs, where are the military leaders, who is supporting Vladimir Putin, and what does this mean longer term about his tenure atop one of the big nuclear powers of the world?
We'll give an update on that in a moment with Maria Tadeo in Brussels. Let me get to the data. It's important to get to Maria. And then Jack Ablin to start us off strong across surveillance today. Futures up 8, Dow futures up 10, the VIX 14.26 really shows a stability over the last 48 hours, even with all in international relations. 10-year yield 3.73%. I got nothing to talk about here. Oil, $68.49. Maybe oil's a little soggy, $68.51 on West Texas. Brent crude under $74 a barrel, and I'm going down in flames here. The currencies just 109.44, and the euro Renminbi, not even renminbi's giving me something to talk about, 7.22.
I'll give you something to talk about.
Please.
In particular, the euro strength is interesting to me and bumping up against 110 after the comments we heard from Christine Lagarde at that Sintra conference this morning, where she said that they are going to hike again in July and their fight is not over, even after disappointing data that they got with respect to the PMIs out of the euro region. It is day 2 at the ECB forum in Sintra, and I'm looking at the 210 spread in Germany, which is now the most inverted going back to 1992. At a time when people are forecasting the ECB to raise rates, and then that leading to slower growth.
I'm so glad you brought this up, because when we say 1992, folks, in America, that's not like 1992 East Germany, West Germany, and the reunification. So I think there's a real inversion there. It's got a real historic feel to it versus the usual analysis in America.
We're also looking, as you said, about eco data in the United States in particular. Home price data coming out at 9 a.m. We get S&P CoreLogic and FHFA housing data. We have seen a massive rollover of some of the data, in particular the S&P data. Does this give a sense that we're actually seeing the heat come out of this market?
Keep this chart up here on radio. It's real simple. Housing inflation and a massive plunge. This is the 20-city Carl Case Robert Schiller Index. And what's, the detriment here, Lisa, is old news. It's 2 months, 3 months old. It's not current housing data, but I think it's got enough import and enough trend to it where I really lean forward and watch it.
Especially because it is the lagging data that goes into CPI, which is factoring into the Fed's decisions. And today we do get some earnings. Walgreens Boots Alliance at 7 a.m. will be covering that. Those shares have been beaten up so far. Manchester United is also having their annual general meeting to talk about maybe Middle Eastern money. But I do want to say, this earnings season will be unlike any other, particularly with the tech giants. And so any read that we get in, we could see disappointments are severely punished. Do we have some sort of tipping point in markets if you don't get some sort of blowout results?
That's, I'm glad you bring this up, because it's the tension right now. We've got all this distraction of Russia, but the bottom line is this massive mystery starting, I believe, the 14th of the month with JP Morgan. And it's going to really be, folks, we're going to really try. Lisa's taken off all of July, but other than that.
Pretty much.
Okay, there's our moment of silence for my vacation plans. Futures up 8, Dow futures up 17. She did a killer job over the last 48 hours from Brussels, coalescing all of this news on Russia. Maria Tadeo joins us now from Brussels. Maria, it seems like we're focused on Belarus. Slice through the noise. What is the lesson or the observation from Mr. Lukashenko this morning?
Tom, the key question for me is, what did Lukashenko get out of this? What was he promised by Vladimir Putin? Because these two, they act like they're friends, they're allies, but we know that this is a very transactional relationship. Vladimir Putin has now essentially sent away Prigozhin, a headache away from Russia. Belarus is going to host him. Today, Lukashenko said he will honor part of his deal. But again, the question is, what's in this deal for Lukashenko and Belarus? The other key point to me is Wagner, the future of Wagner. I think it's safe to say today, I'm not sure if it's the end of Wagner entirely, but it really is the end of Wagner as we knew.
Last night, we heard from Vladimir Putin coming out, giving his first address. Since a lot of this news went down, a lot of people were surprised it didn't say more. What are some of the questions that people are asking about why Vladimir Putin did grant amnesty after all of that to Prigozhin, and also is trying to move forward? Is his leadership truly threatened, or is it basically behind them?
Yeah, and that speech from Vladimir Putin, if I may say, yesterday was pretty boring. In fact, there was a lot of thank you, spasiba to the people of Russia for their patriotism. Again, we should note, we don't really know what the people of Russia think, because at this point you have legislation that if you say anything against the war could get you in jail. So it's very difficult to tell. On the one hand, again, repeating that they have crushed this rebellion that Ukraine is led by Nazis. When it comes to Prigozhin, however, it's very unclear, because yesterday, Vladimir Putin said the leaders will be brought to justice. This morning, the Russian MOD says that probe is closed. The key point, however, is that we have not seen pictures nor footage of Prigozhin. We still don't know where this man is or his condition.
Maria, we're going to join you in the next hour with Anne-Marie Horton to give us the transatlantic perspective. But right now, if all of this didn't happen, does Mr. Putin still have control of the military as he did, say, 5 days ago?
It seems to some extent that that's what he wants. And the key point when it comes to Wagner today is that they have now decided or agreed, according to the Russian MOD, to hand over their weapons. Vladimir Putin also yesterday said either you join the Russian army or you go to Belarus or just go home. And then yesterday, Shogun, the defense minister, was back in the picture. So the optics around this is that this is now the Russian army who's going to deal with the operation in Ukraine, not Wagner. The problem for Vladimir Putin is that objectively, Wagner has operated better than the Russian army in Ukraine.
Maria Tadeo, thank you so much. We'll see you in 60 minutes. She is in Brussels, spearheading all of our coverage here on Mr. Putin and the debris of the last few days. The debris of the market is you're not in it. Jack Ablin is the kind of person that gives you confidence to be in the market, Chief Investment Officer at Crescent Capital. Jack, I love your note, which goes to the heart of my thesis for 2023, which is corporations will adjust to the cards they're dealt. You talk about a new corporation, a new constituency. Are corporations adjusting to 2023 and a potential recession?
I believe they are. I think that they're certainly not holding the cards that they once were during the globalization move that we've had from call it 1980 through 2012. What we are finding is that their clout in Congress is not as strong as they had in the past. We're seeing that, of course, with Microsoft, Activision, and some other challenges that that a lot of these mega cap tech companies are facing right now. So, yeah, I don't think they're holding the cards that they have, and they have to make an adjustment.
Jack, the resilience in the market right now is shocking to me. We've gotten so much news, whether it's Russia and the uncertainty there, whether it's the ECB and the decidedly hawkish tone out of Sintra. What do you sort of attribute this incredible resilience to? The fact that a lot of stocks are shrugging off all of the walls of worry and saying, you know what, we're going to do just fine.
Yeah, I mean, I think that many investors are looking past the turmoil, perhaps, and focusing instead on mega cap tech as their savior. Here, I think that's run obviously a little too far. We have projected the S&P to be up between 5 and 7% this year. We're up, nearly 14. So I think that there will be some sort of a reversal, particularly when you look at the spread between S&P cap weight and S&P equal weight. I think equal weight is up around 3% or something like that this year, which is really more in line with our forecast. So we think that we could get an index pullback, but a broadening of breadth.
And we've seen a lot of people reiterate this type of sentiment recently. A number of banks have come out and downgraded some of the big tech names, not because they think that they've got bad prospects, but simply because valuations have gotten over their skis. What's the catalyst at a time when even the idea of a hawkish central bank isn't killing these stocks?
Yeah, I think that, right now, Chairman Powell is certainly flapping his arms for 2 more rate hikes. I call that the federal open mouth policy. Perhaps he won't have to execute on that plan. I think that 5.25 is enough. I don't think we need to go much farther than that because fact is that if you look at PPI, which tends to lead CPI, I think we're up 2.8 year over year. So I think we're in a nice downward trajectory in inflation. I think it will cool off on its own. Right. Keep in mind the lag effect. And, once ECB, BOE, take the lead, I think those currencies will move back to fair value. They're all undervalued. I mean, the yen is remarkably cheap relative to the dollar. So I think that's a catalyst for international developed.
Jack Ablin, I want you to push against the outrageous bear, Douglas Cass, because I'm hearing some optimism here. Cass he's grim. He's like a grim bear. Forget about it. I'm hearing optimism from Jack Ablin. How do we establish a second leg to a bull market that Ralph Ankampour and Ed Yardeni called in October?
Yeah, I think it's the handoff. I think it's a handoff away from the mega cap techs and a broadening of the U.S. large caps into the average name. But it's also a handoff from U.S. centric to international. Just look at the currencies. Euro probably 15 to 20% cheap relative to the dollar. Yen probably 40% cheap relative to the dollar. And so you really have a couple of catalysts. You've got not only valuations trading at roughly half that of U.S. large caps, but you've got currencies that are remarkably cheap on a purchasing power parity basis. So essentially, from our perspective, you have two ways to win in a trade like that. I think Doug's a great guy. He's a very smart guy. When he goes bullish, I'll listen.
Jack Alvin, I will leave it there with all that's been going on. Lisa, forget about bull and bear. Jack Alvin alive, Doug Cass dead, with the Dead and Company and all that out there. But this is the debate right now. You've encapsulated this perfectly in that we're on mid-year reviews and outlooks, and the disparity is just as stark as can be.
You have on one side the Mike Wilsons of the world, and Goldman Sachs seems to be joining them as well, basically saying that valuations are capped by where rates are and the fact that things have gone up so quickly. And then you have other people saying, this is a game changer. You have artificial intelligence, the whole trend there, and the spending. You also have a better than expected economy. Why can't you look at the fact unemployment rates are low and celebrate?
Yeah, and I look at it costed at Goldman Sachs, and I think they were constructing a bullish scenario a couple weeks ago based on multiple expansion, and that's maybe drifted away. We'll have to dig into that across all of surveillance today. Coming up, our Francine Lequan, Portugal, at Sintra, a conversation with Gita Gopinath of the International Monetary Fund. Stay with us on radio and television, Bloomberg Surveillance.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
If Putin is out, the person or the regime that may replace him, actually, we may need to have a much more strong response to that kind of regime that may be much more hawkish, much more hardline than Putin himself.
I will not mince words. Saturday night in the chaos, a select group of voices on Twitter cut through like a knife. One of them was Ian Bremmer from yesterday. We're going to talk to Julie Norman here in a moment. She was wonderful. Leading was Alina Polikova, President and Chief Executive Officer of the Center for European Policy Analysis. Lisa, Alina was just superb in the uproar Saturday, I believe it was Saturday evening.
And the background to this is that the uncertainties and the rumors just absolutely abounded, the catastrophic scenarios, the potential Goldilocks scenarios, everyone coming out. And here we are 2 days later, What have we learned? Do we have more clarity
I agree.
right now?
I strongly agree that we don't have much clarity right now. And I think that's what we're all struggling for. And that's why we've got Maria Tadeo reporting from Brussels, and Marie Horton in Washington as well. Right now, with futures up 7, we're going to go to someone with a measured voice on these affairs. Julie Norman has assisted us. Her first work in academics was in terrorism worldwide, but she's expanded far beyond that with a remit at the UCL Center on U.S. politics. Julie, how should the West respond to Vladimir Putin?
Well, Tom, I think in terms of what's happened this weekend, Biden, NATO, and the West in general have been playing this right so far, in that Biden very quickly on Saturday immediately made contact with Moscow and said, this is an internal affair. We're not having anything to do with this. This isn't an outside job. And they've been publicizing that communication since. That's been trying to get ahead of very likely conspiracy theories within Russia from Putin himself about all of this being orchestrated from the West. So I think they were right to have that communication, but also to mostly stay quiet while this is playing out and let this be the internal affair that essentially is, while obviously continuing to support Ukraine as they have been.
Do you think that we will get a different theme from the dictator of Russia, and that he will talk in some changed way about the Nazification and all these other inflammatory words we've heard from Vladimir Putin? Are we going to get a new script in 2023?
Well, Tom, I think one thing we know about Putin is he's unpredictable. It's been very hard to read his movements, his narratives throughout this whole war and even before that. The way he responds to this, as we've just been talking about, is still unclear. My sense is, if anything, we can probably expect more of a doubling down on some of the terminology and some of the rhetoric and some of the policies he's been engaging in before. But again, his responses to everything that happened over the weekend was a bit different from his usual playbook. So we really don't know how he's going to move forward from this and what tactics he's going to use. But I do expect him to keep moving forward, and I don't see him stepping aside or something like that just because of what transpired over Saturday.
Julie, do you have any sense of what Lukashenko is getting for Belarus to be part of these negotiations and housing potentially Wagner troops that have been disbanded?
Yeah, it's a great question, because that's been a bit of an unknown throughout all this, what Lukashenko's role was in mediating, if he offered that, if he was asked to step in. I would note this comes just a week after Putin, and we've been confirmed elsewhere, has started moving tactical nukes into Belarus. So Belarus, one way or another, seems to be emerging as an even stronger player than it already was in all of this. And a lot of speculation on to what that means. But I imagine there will be a lot of attention on him and on Belarus more broadly as the counteroffensive continues and as this war continues.
I have to say, I was reading part of the readout from the meeting in Belarus between Lukashenko and Prigozhin and the Russian counterparts, and a spokesperson saying that they were very difficult conversations. They immediately blurted out such vulgar things it would make any mother cry. The conversation was hard, and as I was told, masculine. This is sort of the readout that everyone can imagine. That is actually what it said. But from your vantage point, Julie, what are you asking going forward to indicate how much power Putin still has, whether he still has the consensus of the oligarchs, whether he still has the consensus of the military?
Yeah, so I think there's a couple different moving pieces here. There's Wagner, the Wagner Group's own trajectory moving forward, which I think will be much scaled down. There's Putin's trajectory moving forward, which I think many are saying is very much on its downward spiral. I would say it's a little premature to say that. I don't think this is going to be, a death knell kind of thing for Putin. I do think we'll see him rebound from this. And then the other question is what this will mean for the war right now. Is this going to decrease morale to a certain degree for Russian troops that'll change the dynamic for the Ukrainian counteroffensive or not? So there's a number of moving things that I would just say, if I'm being honest, we just don't know enough right now about how most of this will transpire from here.
So what do you think the next couple of days will bring? I mean, I love the idea, Professor Norman, that we don't know where we are. I think we all feel that. What's the Norman bet for the next 72 hours?
Yeah, the next 72 hours, I would say, I think we'll see Putin trying to regain and restabilize his authority. We've started to see that even over the last 24 hours with some of the speech and the statements that he's made. I expect that we will see some of this play out on the battlefield as he tries to, again, assert his control of the situation. So I'm looking at most of where this is going to play out in terms of the war, in terms of the battlefield, as well as, of course, what's happening inside the Kremlin.
Julie Norman, thank you so much for joining us today from the University College London Center on U.S. Politics as well. She really crystallized for me the uncertainties there, and I guess they're different uncertainties, but they're the same uncertainties as this weekend. Nothing's changed.
Nothing's changed, which is remarkable given the fact that so many questions abounded. What I find fascinating is in markets, the response is still pretty much nothing, right? If you can't game out a scenario, just ignore it because there are so many uncertainties. And that's what we heard from guests yesterday. There's so many uncertainties. So why should I plan for one that's, either way could be extreme on one end or the other?
Dollar ruble, which Damian Sassauer tells me is not a real market, migrating here out to 15-month a weakness here and buttressed right up on an 84 up to 85 level, 84.90. I don't have any wisdom even on a weekly chart. You can do that on the Bloomberg terminal, folks, GPW space roll. I mean, the other than the spike of the war, the shock of late February when we were speaking to David Folkets-Landau about this, the ruble's out to new weakness other than that spike. If you want to, we're above the long-term moving average here on ruble weakness. I did not know that. I mean, there's some real fragility there.
That's one indication, although, as Damian Sassauer says, the ruble isn't a real market. Not that many people trade it, and it is sanctioned even. That limits even further trading in that currency. I'm looking at the commodity sector, seeing oil prices lower, even as potential disruptions abound. Copper prices lower, even though, again, you could get some sort of disruption in supply chains. So these are the kinds of things that we're not seeing any kind of major reactions, even though there still are so many questions remaining about one of the world's biggest nuclear superpowers.
A pandemic boom in commodities, just to use the index levels, folks, from 60 to 130, called a doubling in price. I remember Newcastle coal. I thought Newcastle coal was in England, and I got an email from a guy from Perth who said, no, Newcastle is, I can't pronounce it the way the Australians pronounce it.
You thought that Newcastle was like a club team?
It's sort of north of where the Veronicas live is all I came up with. Anyways, there was a commodity boom here from 60 to 130, and we've given up, a quarter of it. We've given up a third of it, but I totally take your point. And this goes to Gita Gopinath coming up here with Francine Lacroix. The arch issue here is the IMF call that we witnessed in Washington for global slowdown with Dr. Copper as the global thermometer.
And the global thermometer of Dr. Copper is indicating downward this disinflation that central bankers are counting on, which
Jack Ablin mentioned.
And Carl Weinberg yesterday, the most positive he's been since the 1960s, because he thinks that the central banks are going to get back to their goal within the next year.
And you heard it from David Folkets-Landau off our London desk at Queen Victoria Street as well. Some of these grizzled guys that have been through this a fair amount, they're not doing what we're doing, the punditry and all that. They're really thinking about what's the outcome 18 months out, 2 years out. And they're pushing against Bramo here. I mean, they've got some serious optimism going.
This is sort of one of the tensions that I find fascinating. Bonds pricing in the now, which looks potentially fraught. Stocks saying, forget about it now. It's going to be fine. Forget about it. So which do you go with?
We'll see. Coming up, with the International Monetary Fund, the first Deputy Managing Director, Gita Gopinath, in conversation with the Pulse's Francine Lacroix. Gita Gopinath, we do that next.
investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Climate is one thing that connects everybody across the globe. And if we don't do something about it, it brings down the value of all companies.
Bloomberg surveillance from New York. Lisa Abramowitz and Tom Keene, Jonathan Farrow on assignment. And we look here at the end of June and into July. We're focused on mid-year outlooks, but we're also focused very much on the path forward for our global economics. Futures up 8. They noodle here. I mean, Francine, what's a single? Lisa, what's a single thing you see on the data screen today? I had renminbi to help me out yesterday. I got nothing going today.
Well, to me, the euro is interesting because of some of the hawkish comments out of Sintra. The fact that ECB's officials have been talking about continuing to hike rates, and you are seeing that euro bump up versus the 110 versus the dollar kind of measure. The yield curve, especially in Europe, fascinating, the most inverted going back to 1992.
A little less inversion in the United States, 96 basis points off 103 basis points. And critically, I haven't mentioned this yet, this morning, the 10-year real yield in the United States had a bit of a rebound in the last 24 hours back to that 1.54% level. It is without question the hallmark research analysis of the year. You could hear the silence in Washington as the International Monetary Fund, led by the economics of Gita Gopinath, looked out to 2028 and saw a growth trajectory that took us back decades to 1990. It was an extraordinary call on tepid economic growth. We need an update. We go to Portugal and Sintra, the meetings of the European Central Bank. Francine Lacroix of The Pulse in conversation with Dr. Gopinath. Francine, good morning.
Good morning, Tom. I am delighted to be joined by Gita Gopinath, of course, of the IMF, who yesterday also really opened the forum here in Sintram with a very powerful speech linking fiscal policy and monetary policy and really reminding everyone that they had to work in tandem. So, Gita, thank you so much for joining us. When you look at the fight against inflation, there's now a lot of talk about recession, the fact that core inflation is still high, but headline inflation is coming down. What does a policy mistake from central banks now look like?
First of all, it's a pleasure to join you, Francine. What we're experiencing is that inflation is taking a long time to get back to its target. And yes, headline is coming down significantly, but core inflation, while it has eased, is still persistently high. So in this environment, our advice is that central banks will need to stay the course. In the case of the ECB, that will mean that some more continued tightening, and then to stay on hold to make sure that you're confident that inflation is coming back durably down. And that could come along with more weakness in labor markets that we've seen so far and more weakness in the economy in general. But that's what is needed to bring inflation down.
Do you worry about the markets? And I know you don't look at the markets day in, day out, but there seems to be a bias in the markets that actually inflation is coming down and that central banks will be, ready to not hike as much as maybe, they will. So is there a danger that the market is mispricing something that will then create an event?
But the markets have been off since the start of this year. I mean, if you look at their expectations of the policy rate path in some countries, especially the US, they were expecting 3 rate cuts this year. for U.S. Fed policy. And they have adjusted. They've come back now to recognizing that, no, we are here for longer than was expected. So I think markets have been very optimistic, and I suspect they're still somewhat optimistic about the path for interest rates.
What do they most misunderstand? Is it the fact that interest rates have to remain higher for longer, which Christine Lagarde actually laid out beautifully in her speech, or that they have to rise higher than expected?
I think it's how long they're going to stay at that. I think that's the part where there is a disconnect between the markets and what central banks are signaling. And so far, it's the markets that have had to correct to central bank paths as opposed to other way around. So I still think that they're off a bit on the duration for which they'll have to keep rates high.
What's the path forward for growth? Should we worry about once we get inflation in control?
We are seeing growth weakening. We are seeing slowing activity at this point. We need to bring inflation down to have sustainable growth, which is why it's super important to do this. This time around, since it's not just a demand phenomenon, we've had supply disruptions correct themselves. We've had energy prices come down. I think both those factors are helping bring inflation down without needing too much of a hit to the economy. But I think we have to wait and see. We're only just seeing the effects of monetary policy work through the system now, and we could see much more slowing.
But is that why, why is core inflation so stubbornly high? No one can quite figure it out, which is why it keeps on surprising us to the upside.
It's a big part of the conversation we're having at Sintra, which is it the fact that monetary policy transmission is now weaker than it used to be, or is it the fact that you haven't raised interest rates by enough? I think these are questions that are coming up. We have a situation where it has been the case that household balance sheets, corporate balance sheets have been strong, which has helped hold up resilience. Labor markets are tight. People believe that they will have a job, they can keep a job. Wages are going up. And services spending tends to be much less interest sensitive than when it comes to durable goods, which consumers piled up on already during the peak of the pandemic. So I think all these factors could be muting the effect of monetary policy transmission. But now, as those effects decline, we could start seeing more of a slowing in activity.
I mean, to put it simply, a nightmare scenario would be some kind of spiral. So you have wages going up, prices go up, and then you lose control. Are we there yet?
I don't think so. We're not seeing that in like in the US or in the euro area. We certainly are seeing wage catch-up, and that has happened. That's happened in previous cycles too. We should expect to see that. But we're not seeing wages pushing up prices. The concern, of course, is that if it takes so long to bring inflation down, then you might unhinge inflation expectations and then trigger a wage price spiral. This is why President Lagarde spends a lot of time talking about, the persistence of inflation and the reason to stay high for long.
So is that why interest rates, you think, have to stay higher for longer? Is it really, it's to get inflation 2%, but really it's to try to break through that spiral that could be impossible, actually, almost to get out?
If you look at projections for when inflation gets back to target, in the euro area, that's the middle of 2025. That's 2 years from now. That is a long time. And that's why it is critical that you can't have any further risks to de-anchoring of inflation, because 2 years is a long time to bring inflation back down to target. To make sure it happens, you have to stay the course and keep interest rates high until you see durable signs that core inflation is coming down. Then, of course, you have to be data dependent.
All the world's central bankers are here. It was quite exciting for me to see Jay Powell also walk in his sneakers. I don't often see him actually in sneakers or face to face. Is the gravitational pull of what the Fed does too heavy to hand for the ECB, but also the Bank of England and the Bank of Japan?
What the Fed does matters for the whole world, including for other major central banks. But I think this is a time when central bankers are coming together also to understand inflation dynamics better. There are still several questions. There's a lot of uncertainty on the outlook. And Sintra is a good learning experience for all central bankers.
How hard is it for monetary policy to counter fiscal policy? And again, because we're seeing inflation rise, that means the cost of living goes up. So it's understandable that politicians want to be there for their citizens.
I think it's perfectly good for governments to want to be there for their vulnerable citizens and to provide targeted support. What is not really good at this point would be to have broad-based support that generates very large fiscal deficits, especially increases in fiscal deficits, that then feeds into inflation. That is a problem. all the indicators, the fact that we have high inflation now, the fact that debt is high, and we need to build buffers because there are going to be future shocks, all of that point towards fiscal tightening, and that's what we're recommending.
When you look at the big central bankers around the world, and of course, you know, dealing with inflation and growth, who do you think has the toughest job? Bank of England?
I think at this point, among the major ones, if I put the US, the Euro area, and the Bank of England, I think in the UK, the inflation problem looks more difficult than in the other parts because they have a supply shock problem that came from the energy prices, and they also have the demand side, which is very tight labor markets. And if you look at wages, in fact, in England, this is where you see the most amount of wage pressures coming in.
So how do they get, again, there's also huge reliability on mortgages. So it's not as easy as you just keep on hiking because the housing market is so sensitive to that.
Well, I think firstly, the fact that the Bank of England raised rates by 50 basis points recently in their most recent meeting, I think that's a welcome step. That's a clear signal that they are in the fight to bring inflation down. One of the reasons they've been somewhat cautious is exactly what can happen to mortgages and the housing market. But, you know, there's been an increase in the duration of fixed-rate mortgages in the UK, so you have some attenuation of that effect. And household balance sheets are much stronger than they were in the past. So that should also help.
Tom Keene was also talking about, of course, your outlook and what we saw just a couple of weeks ago by the IMF. Are you more optimistic now about the world economy in 2024 than you were 6 months ago?
We had a projection for the world economy to grow at around 2.8% this year, which was, you know, coming down from 3.4% last year, and then going up to around 3%. Our new numbers will be out in July. We don't have it ready at this point. We're getting different data from different countries at this point. But I think the overall story of an economy that's slower this year than it was last year will remain.
So how much of the conversation here is also trying to understand some of these forecasts going forward and how central banks actually can do a better job in understanding the impact that monetary policy has on future inflation?
I think everybody's trying to understand how economic activity is being impacted by the rate increases that have happened so far, because they've been sizable. The expectation was that we would have seen more slowing down already than we've seen so far. So the surprise is on the resilience of economic activity. Now, of course, we don't want to extrapolate and just assume that this resilience is going to continue. So it's a difficult job for central bankers at this point. They have to, you know, watch the data very carefully, but at the same time, they have to show real commitment to bringing inflation down.
Gita, thank you so much for joining us. Gita Gopinath there, of course, of the IMF. I also spotted, Tom, the new central bank governor of the Bank of Japan. I have to say it's like a rock concert for nerds. We were quite excited because it's the first time I think he's been traveling for an event since he was made governor outside of Japan.
Yeah, the invite got lost in the mail. Lisa was looking for it through her mail today. All I can say, Francine, is you and Dr. Gopinath, I can just see you having the Travestiero at Casa Pequita in Sintra. Lisa, this is very important. It's a sweet, eggy almond cream dusted with castor sugar on top.
I'm sure it'll be enjoyable. Francine, thank you so much.
Francine Lacroix, reporting from the trenches. I mean, Maria Tadeo goes all these terrible places with ice cold and no coffee and that, and Lacroix is having Travestiero.
Well, my favorite is every shot of Maria with her hair blowing around because it's always windy and blustery. It is interesting, the difference between Jackson Hole and Sintra. Sintra, very civilized, and Jackson Hole, very much the rugged American Western lore of, you know, FDR and Teddy before him.
They're different, and there's been some discussion of making Jackson Hole more Sintra, and there's real academic pushback to that. Academic economists enjoy the rigor and the almost Jesuit certitude of Jackson Hole. It's really serious about the papers. Mike McKee's all over this stuff. And Sintra is more like a modern conference with people like Dr. Gopinath talking.
And good restaurants.
And I would just,
all that.
We're selling this. Come on, Qantas, help us out here. Next year's Sintra. We'll take Pharaoh if he comes back. But to me, the really serious thing here, in the conversation stopped there, is Dr. Gopinath said, well, we don't really know in July what our update looks like. There was a pause there in the conversation.
It seems as though people are speculating there may be a tipping point in markets, in the economy, that it's going to happen quickly. We've heard about this rapid disinflation. We've heard this from Morgan Stanley. We've heard this from others.
Yes.
A lot of the market prognosticators and the economists don't want to come out with assertion and just follow the price action, because that's essentially what we keep hearing from a lot of people in the market as they reassess. We like markets now because the mood has shifted. Is this just price dictating narrative?
And Michael Darda encapsulated this yesterday. Nice bull. He had bulls behind him in his backdrop in his fourth house. But Darda really encapsulated it in his caution of its disinflation, with like the IMF declining real GDP as well. Others are more optimistic on that, and that's the battle engaged for July. Coming up next, looking to July always, Kit Jukes, Chief FX Strategist, SocGen. We'll speak to him about what we can read in the leaves of the foreign exchange market. From New York, stay with us. This is Bloomberg Surveillance.
Sports and money, they've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
multi-trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
Seeing very good buying of dollar in our underlying flow data. This carry trade, led by commodity currencies, high yielders, and dare I say it, AI stocks and things like that. That seems to be on the cusp of unwinding. These things on the margins cannot advance much further. So we are looking at risk probably softening in the short term. You don't want tail risk to compound that.
Jeffrey Yu, with massive critical thinking skills across equities, bonds, currencies, commodities, he is a jewel at BNY Mellon. We got to get him on. I think we should, like every third day, have the U hour.
Our people will talk to his people. My AI, my ChatGPT will talk to his ChatGPT.
Pay him by the syllable. It'll be good. Jeff Yu there with BNY Mellon as well. Futures up 10, Dow futures up at 13. I like your theory, and I guess this goes to 7:30 this morning. When's Walgreens out?
7, like in 14, 13 minutes.
I think Bramo's onto something here, folks. Just possibly it may come down to what corporations actually say about the market. Heaven forbid it's not econobabble.
I actually think that this may be the tipping point. We saw this with Carnival yesterday. The cruise line are reporting earnings. They've been bid up dramatically. The earnings beat expectations and the stock tanked. Why? Because of how much expectation had been built into the share price and the valuation. Do we see something similar with tech? Do we see something similar with other consumer discretionaries? And to me, Tom, this is the key question heading into the middle of July where we kick it off with JP Morgan.
It's going to be something to see, and all that wrapped around what we're looking at each and every day, which is stasis in foreign exchange. Joining us now, someone who's been of immense value to us over the years. Kit Jukes is with the derivative house Societe Generale. their chief foreign exchange strategist. Is there a clear vision to the Jukes memo, Kit? I mean, it's the depth of summer. You're going to spend all of July and August in some shack in Spain on the beach. And I just want to know, is there a Jukes vision of where we're going? Or are you like everybody else waiting to see what happens?
There's a vision, but there's uncertainty about time. I mean, this is an extraordinary cycle. But the one thing that I was listening to, reading Gopinath, Gopinath was sort of saying, we're uncertain about the lags. The lags are long and variable, and everybody's impatient for the lag to play out. It'll play out in its own time because the single most unique feature of this cycle is that we ended up with really easy monetary policy, really easy fiscal policy, and really, really tight labor markets because of a pandemic. And then from there, tightening and getting that out is taking longer than we thought. Well, gosh. But so I sit there and think in one of the next 26 Thursdays, I'm going to come in one day and I'm going to see a weekly jobless claims number that makes my mouth sort of hang open. And I think, wow, here we are. I mean, this cycle is going to end. This plane is going to land. But we're completely at a loss to try to figure out how long those lags are. And we're nervous that when it does land, will it land as softly as we hope, and so on and so forth. But I think that vision's super clear. What is terribly difficult is to guess how long it takes to play out.
One definitive thing that Geeta Gopinath said was that she thinks that the UK, your UK, is in the worst spot of all of the central banks in terms of combating inflation. Is this supportive of the pound or negative for the pound because it means higher rates and slower growth?
Well, right now, markets are more myopically focused on short-term interest rate differentials than I can remember them in the foreign exchange market. So right now, the pound's doing well. In the long run, though, if you've got a really lousy growth inflation trade-off, which is what we've got, you have to get rates up a lot, and then you get a worse economic slowdown, and then you'll get more rate cuts. So we are supposed to be taking our pounds, and as strong as we can get them, we're supposed to be turning them into something useful like Swedish kronas, so that this time next June, when the sun's shining in Sweden, I'm on a boat outside Stockholm with my feet up and a glass of beer in my hand, having loads of fun at today's exchange rate, because it'll be completely different by then. And yeah, each week I just kind of sell a few more pounds.
Lisa, you and I got to get our heads examined. Do you see how Jukes talks there about vacation like Pharaoh does? Well, it's like a God-given right. It's like the king descended and said, Lord Jukes, Lord Pharaoh, take August off.
Well, and I will say, Lord Jukes, Lord Pharaoh, come do that in the U.S. I'm curious from your vantage point.
Idiots.
As we look for, I support it wholeheartedly. And I will join you on that Swedish boat.
Kid, I need to go to Spain for one day. Where do I fly
Oh, my goodness.
so the plane can wait?
Absolutely. Kit, when we talk about our travel plans, let's talk about the dollar. Since we're going to go there, how strong is the dollar going to be versus all these currencies to plan our one-day vacations? And this has sort of been one of the surprising features is, are we entering a reversal period of the dollar weakness of the first half of the year? Or does what we've heard from the ECB, what we've heard from the Bank of England, what we've heard just generally around the world really challenge that and indicate more weakness ahead?
I think you're going to get more weakness ahead for the dollar over time from here. I mean, it's still very strong, and it would be amazing if it didn't actually weaken at some point. We have seen, I think Jeff, you put it very well. We've seen buying of dollars from people who are trading U.S. exceptionalism in AI stocks, for example, who are trading the U.S. economy is not slowing down yet as a theme, and the market's pricing in the idea that the Fed hasn't peaked yet in terms of rates, and it's pushing a little bit more in there. And there will be some people who will turn around and say that there will never be another U.S. recession because the U.S. economy is so wonderful. As those people get themselves fully priced in, which I don't think is terribly far from here, that's as good as the dollar can get from here with the rest of the world recovering. So you're a bit like me. You have a strong currency today. It's not going to be strong forever. On that basis.
Could you frame out the opportunity on the Pacific Rim, and particularly with the shock and awe of yuan? I mean, it is a devaluation of the Chinese yuan. I'll let you decide where that tip point is, but all eyes on 7.15. We blow through that to a 7.23 right now. My eyes are failing me. 7.22 on yuan. Frame out the opportunity on the Pacific Rim.
The Chinese opportunity is that the Chinese have a problem reviving their economy. They don't have much inflation. I mean, these are not big moves in percentage terms compared to what we see in lots of other places. So they could go further. There's certainly nothing to help it now. I worry that China, if it tries to revive its economy, it can't easily go back to the old kind of boost the real estate market yet again. They'll probably have to make manufactured goods and sell them to the rest of us. And they'll welcome a weak currency to help them do that. So they may get some pain in China. The pain will then spread to the other people who rely on them. I wouldn't want to be terribly long the Australian dollar today if they're trying to sell iron ore to a Chinese economy that's struggling. So I think, and you can see this year, one of the features of this year, the strongest currencies have been Central Eastern European ones that fought inflation hard and Latin American ones that fought inflation hard. There are no strong Asian currencies this year. None of the top few currencies are. I think that's what tells you that the market is kind of getting this to some degree. I quite like selling the other Asian currencies against the yen because the yen's going to frustrate me until it starts going up when they make some policy changes. Mr. Wader could do the world a big favor by getting on board with everybody else today, but that's not going to happen.
I need to extend this conversation, but we don't have time to do it. I really want to talk to Kit Jukes, folks, in the coming days from Spain on yen at 144, 146.48, and back you go to the tension of 150. Kit Jukes, brilliant at SocGen. His morning note, we should explain this, Lisa, and this is really important, and this goes back to the advent of Bloomberg surveillance and, frankly, Bloomberg on the economy. Years ago, we don't talk to each other. This is really important. We don't compare notes in the morning. There's no meeting where we all get together and go, oh, did you see Kit Jukes' note? It's just completely random. And it works, because Pharaoh sees stuff I don't look at. You see stuff. Every time Lisa opens her mouth, I learn something because I didn't see it. And that's the magic of how we do this.
No one who's listening to this is surprised that we don't talk to each other at all before this show.
No, we do it on purpose. They said, oh, we have to have a meeting. Qantas is like, we got to have a 2-hour meeting at 3 a.m. And I'm like, no, we're not. I don't, let Lisa read what she reads at 9 p.m. at night.
Well, here's what I was thinking about at 9 p.m. last night, because I do have a fantastic life. I'm wondering whether some of the indicators that we're looking at right now are broken. Whether the yield curve is broken.
Brilliant.
Whether oil as an indicator is broken. Whether we can look at some of the distortions and the rejiggering back to a pre-monetary repression world. Are we in something where those indicators don't work?
Here's my answer, folks, and I go to the great Yale PhD, Edward Yardeni. I think he's dead on. Patience. We had a pandemic. I was so wrong about the pandemic. My grandmother, born in 1907, used to lecture me on 1919 and the pandemic then. We're coming out of a pandemic. It's totally original, as you say, and as Yardeni says, patience. That's where I am.
Gita Gopinath agrees with that.
Futures up 11. Futures advancing on the Bremel optimism.
Something like that.
We'll leave it at that. The VIX 14.19. We're on radio. We're on television. Please stay with us. Stuart Kaiser, the optimist, next.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Forget a degree in finance. Go for a career in tech instead. That's the advice from the latest Bloomberg survey of professional and retail investors. Only 1 in 5 Wall Street professionals say high school seniors graduating this year should follow their footsteps and go into finance. About half say that Gen Z's best bet actually lies in the tech sector, and that's despite all those recent layoffs at companies like Meta, Amazon, and Google. Still, hiring trends paint a rosy picture for those with a background in tech. Industries ranging from auto to the federal government have jumped at the chance to recruit any laid-off tech workers. A degree in tech could set you up for a lot of potential jobs and a safety net if any of those jobs don't quite pan out the way that you'd hoped. Survey respondents also expressed concern about the long-term threat of AI. Think ChatGPT taking all of our jobs. For kids graduating from kindergarten this year, about 40% of investors said to go into healthcare. That way, when they come of age, they may be able to hedge against any potential AI-related job takeovers. Roughly 12% said Wall Street would be the right career given that pending AI threat. The AI concerns come despite traders themselves finding that current iterations of ChatGPT struggle with things like math and corporate earnings. But the idea here is that there's still plenty of time for AI to improve and to potentially threaten our jobs along the way.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Could face bigger challenges. Lessons next.
Fed was going to keep rate World Cup. This is a 3.
As the economic picture does. The BOK is getting ready to make a decision.
We are seeing clear signs of a demand slowdown.
We are slowing, there's no doubt about that, but the recession debate continues to go on.
I have a surprisingly positive outlook.
When you introduce this level of uncertainty, it's hard not to see, option price levels as quite compelling.
We find that the value of diversification has certainly gone up quite tremendously.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance on radio and television. It's Earnings Central here as we get out front of the earnings season. July 14th, it really starts with J.P. Morgan and selected other banks. Now, in moments, Walgreens, Boots Alliance. Meanwhile, futures up 10, Dow futures up 14. And Lisa Maria Tadeo with that important brief. She'll join us in this hour with Anne-Marie Horton.
I think it's really telling that you started with earnings, and correct to do so, because we are seeing earnings, and what it is any kind of disappointment is going to get punished severely. We'll go through all the numbers, but there was a slight miss on the EPS, the adjusted EPS, earnings per share for the first quarter, slammed downward, those shares lower by more than 5% at one point. So, Tom, this to me is the question. Will earnings be the tipping point for a market that has otherwise been Teflon?
How many people does Amazon have or whatever? Walgreens, Boots Alliance, merger disaster of the decade, Walgreens from 100 to 30. The total return has been flat over the last 10 years. 325,000 people out of Deerfield, Illinois, and basically they can't get out of their way. I mean, when do we get the restructuring of this train wreck, which goes back to 2014?
As the all-time expert in Walgreens Boots Alliance, I can tell you that, now, look, honestly, there are a lot of questions about the idiosyncratic versus the larger question. The question about how do you compete against Amazon when people can buy online? How do you deal with some of the in-store safety issues that we keep hearing about? And then also the whole cosmetic trend that people keep going after. The larger question here is we have seen remarkable resilience in markets at a time when interest rates tend to go up, and we see central bankers coming out and doubling down, and it is a pandemic-distorted economy that people can't get their hands around.
Just something we're really committed to, folks. We're going to really do this over the next 6, 8, 10 weeks, is really dive more into earnings. We're going to do it off the financial analyst screen of the Bloomberg. It's a huge tool for us here. And just to get the hour started, we've got so much to talk about. Red and green on the screen, I'm going to call it. Futures not doing much. The 10-year yield, 3.73%. Oil under 69. 68.52 on West Texas Intermediate. And Lisa, I'm just going to say, I want you to bring in Stuart here after your brief, but, the basic idea to me, Lisa, is the EBITDA ratio for Walgreens Boots Alliance is 5 cents on the dollar. Their net income is 3 cents on the dollar. Is that a business? I'm not sure it is.
Are you saying that it's not a business?
It's a tough business.
It's tough business, yes. Definitely a business. Tough business, perhaps. Everyone would agree on. I will just say that it is the kickoff for the ECB forum in Sintra, the official one, with Christine Lagarde giving the introductory speech earlier. I'm watching the 210 spread in Germany. We talk about the one in the U.S. Yeah. It is the most inverted going back to 1992 at a time when Christine Lagarde is saying there's much more to do. July is basically a given when it comes to rate hikes, and further rate hikes will be on deck. Today, the eco data continues. A lot of housing data, particularly at 9 a.m., the S&P CoreLogic 20 City Index, as well as FHFA data. We have seen massive declines in home prices, at least on average. When we look forward, is this a passing trend? Is this a lagging indicator at a time when we are seeing signs, shoots of optimism there? I will just say, on the Walgreens point, I want to just give you some of the headlines. Walgreens now sees a full year adjusted EPS of $4 to $4.05. They had seen substantially more than that. And this, I think, they had seen $4.45 to $4.65. This, to me, is the question. How much do we see shares absolutely pummeled, if anything, is disappointing?
There's only one person to answer that question. Walgreens analyst Stuart Kaiser, U.S. equity trading strategy head at Citigroup. Stuart, I know you don't talk about individual stocks, but this is just a microcosm of the earnings battle over the next 6 weeks.
Yeah, I think, look, earnings have been obviously a very pleasant surprise or a very painful surprise if you've been bearish on a year-to-date basis. I would agree with you. The bar is pretty high going into earnings this quarter, particularly in the tech space. So that's going to be, I think, a very, very strong test. We have seen investors kind of gravitating towards stocks that have strong EPS momentum. This kind of happened ahead of last earnings season as well. So, when the bar is high, you try to go with the stocks I think you feel like you can rely on from an earnings perspective.
What do your securities analysts say at Citigroup? They've got this. I get all the feed from Citigroup for some reason, and Jane Fraser, she's long on IBM. I hear about it first, but the bottom line is, what do the troops say about this pending season?
Look, I think it's going to be a mixed bag. And I think the question is, where do you put the most focus? To me, a lot of, to continue the Walgreens conversation, it's the services side of the economy, and it's the labor market and consumer spending that are the things I think you need to pay most close attention to going to the second half of the year.